Good morning, everyone. We'd like to welcome you to the second day of the Health Insurance Affordability Task Force meeting. Full day yesterday, a lot of really good information. Would remind everybody again this morning of the requirement of kindness as we work back and forth with each other and our desire to move the state of Wyoming forward. Let's go ahead and take roll call if we can, Clarissa.
Good morning, Mr. Chairman. This is for the Health Insurance Affordability Task Force for August 14th. Senator Crum.
Excused.
Senator Love.
Present.
Representative Geringer.
Here.
Representative Pendergraft.
Here.
Mr. Boley.
Here.
Director Johansson. Mr. Rudd.
Excused temporarily.
Ms. Ranking.
Here.
Ms. Williams.
Here.
Co-Chairman Nethercott.
Here.
Chairman Larson.
Here.
You have a quorum, Mr. Chairman.
Thank you. So at the conclusion of the day yesterday, we noted on today's agenda that the item number 15, the health insurance cost sharing model, is a conversation we're going to move to October, and we'll not be talking about it today. So we'll be moving right into agenda item number 16, state health insurance coverage. And we're going to flop the order here a little bit. I think it makes more sense to talk about, to get the slide presentation, Franz, that you've prepared first. And then we'll talk about the catastrophic limited plans, and which is what Franz is going to do. And then we'll go into we'll just do it in reverse order and talk about the state provided non-traditional coverage. Then we'll look at the bill draft on the state providing those. So with that in mind, and Franz, if we could ask you to cut that distance between you and your microphone down a little. Your voice is just such an Dirk. I'm telling you ahead of time too. You got to be a little friendlier with the mic. Thank you. Mr. Fuchs, please.
Thank you, Mr. Chairman, members of the committee. My name is Franz Fuchs. I'm the Deputy Director of the Wyoming Department of Health. Slides in front of you are titled "What Was Bear Care?" The idea here, originally was part of our original conception for rural health transformation. As we were going around the state, getting people's ideas on what the main priorities were for rural healthcare, health insurance affordability came up as number 2 in our final ranking out of 10. So we thought we should have something in rural health transformation that tried to address this issue.
So, Franz, if I can, so with that in mind, this bill draft that we'll be getting to is to reflect how we would implement this type of a program in the state. So please be thinking, get this in your mind so that as we go through this bill draft, we can refer back to this presentation and address it. So thank you.
Sir, yeah. So originally the idea was, with the rural health transformation, was to have a large corpus of money called the perpetuity, which would generate returns for funding rural health activities going forward. And we thought, well, if you have a large pile of money that's sitting there, maybe you could use some of it for something like a claims reserve. And so the idea was could we find something that would provide an option for relatively healthy people to buy a catastrophic-like product at very low cost to the state or no cost to the state, but use the perpetuity fund as the claims reserve, which is the major opportunity cost for this program. But that's the genesis of kind of where this idea came from. And, the executive summary just kind of lays that out, right? It's an insurance, a plan that is offered at cost that covers only really emergent or catastrophic medical expenses. The name comes from the pun from the Jungle Book. And in order to affect sort of a cheaper alternative to Obamacare that are not currently subsidized. And this would be attractive mostly to otherwise healthy people. This is really not a plan for people that have significant health conditions. It really is bringing insurance back to a kind of traditional major medical product that was offered in the 50s that really kind of covers those catastrophic expenses, similar to how auto insurance covers liability and crashes. It doesn't cover your oil changes, doesn't cover your tires, that kind of thing. It really is just for those catastrophic type events.
So, Franz, and using that term catastrophic and then refer, because you guys kind of shift, catastrophic could be to cover those things that you can't shop for. You get in an accident, you don't get a shop of which hospital to go to. And so we hear you all talk about shoppable and non-shoppable things. And so catastrophic could cover those events that you really don't have a say or a choice in what services or where you go, whereas an elective surgery you would. Is that correct?
Mr. Chairman, that's exactly the meaning of the word catastrophic. And it's important to distinguish that from in insurance and under the ACA, a catastrophic plan is just a very low value, below bronze plan, but it still covers the 10 essential health benefits. So it's important to distinguish the meaning of the word catastrophic here. This is a different sense. This really truly means in a emergent, non-shoppable type situation. And I'll kind of get into why that was chosen. So here's the problem we're trying to solve. There's a couple problems that this attempts to address. The first is obviously that, as we all know, health insurance is very expensive for people that are not receiving subsidies. And the reasons are, largely, we've talked about a lot of those reasons, but the ACA requires all these products to include a very large bundle of benefits called the 10 essential health benefits. And that increases the price significantly. And as we note here on the slide, that a lot of these benefits are truly shoppable type things. These are things that people could take the time and try to find on their own. They do have time, probably maybe 30 to 50% of healthcare services are shoppable versus truly emergent. And if there are alternative products that people want, for example, if they want to use a telehealth app on their phone for their primary care, or if they want to use direct primary care, which is a model that's coming out that is more like concierge type medicine where you pay a gym membership type fee to see a primary care doc. You're paying twice for that because you're paying for your health insurance premium. The premium bakes in the primary care cost. And then you're also buying this other product on top of that. So those are some of the reasons why, the actual bundle of health insurance as we know it in the ACA is quite expensive. The other significant problem here is, we have talk about, well, let's allow people to buy into the state plan. The reality, and we kind of talked about in the introductory slides when we first started this task force, when we were talking about concepts like adverse selection and moral hazard, it's very, very difficult to allow individuals to buy into one of these type full benefit plans because of adverse selection. The people that are going to be attracted and want to buy into that plan are going to be people with significant health needs who may be sicker. And healthy people are just not going to find it a good deal. And so at the end of the day, if you allow buy-in to any kind of group plan, that is going to potentially cause this adverse selection effect. And ultimately, if it gets really bad, you get the death spiral. Sounds dramatic, but just basically means the costs just keep escalating because sicker and sicker people stay and the healthy people leave. So this was, as we noted in the past slides, this is kind of mitigated by a couple techniques. You could only cover groups of people, or if you do allow individual buy-in, you really significantly underwrite those folks. You assess each person's risk individually and you price it accordingly. At the end of the day, the idea behind offering Bear Care was that non-shoppable services are not something that people know their own inherent risk. It's very hard to know what your risk of getting hit by a bus is or having a car accident. I mean, there's some aspects, I guess, with the bear attacks, right? If you're hiking in a certain part of the state, you may be at higher risk of being attacked. But that said, generally speaking, the shoppable stuff is where people kind of have a sense of their own health needs. And that's kind of where the adverse selection can kind of come into play. So offering a catastrophic only type plan sort of tries to mitigate against that adverse selection because the people that are going to buy this are not going to necessarily know their risk more than anyone else. And so you're not going to attract and self-select for sicker folks. In fact, it's going to be the opposite. You're going to really select for healthier people that feel like they don't need health insurance. Ultimately, of course, we talked, why are health premiums high? It's the healthcare costs. And just some, one problem here is, subsidies are great in terms of transferring risk across society. We really try to spread risk. It's really kind of socializing that risk and saying, hey, we're going to take care of folks that may have higher health needs. But at the end of the day, there's that moral hazard that comes into play, right? Another term from that introductory slides, when someone else starts paying for stuff, that stuff tends to get more expensive. And so costs generally will come down best. And we've seen this across time, various, in railroad deregulation, airline deregulation, we see it in healthcare services that are not covered by insurance. The prices have come down during deregulation. When things are exposed to free market competition, that does tend to reduce cost. And so LASIK, for example, is the same cost in nominal dollars today than it was in the 90s. So actually the real cost has gone down quite significantly because insurance doesn't cover it. GLP-1s, I think it's interesting to note that Medicare, other plans they're starting to cover it now, but they weren't covering it for the past couple of years. And really it was only available on a cash pay market. And that has forced insurance or pharmaceutical companies to reduce their prices. So the cash pay price for GLP-1s has dropped significantly since their introduction. And more generally, I have, you can see here, this is the inflation index from 1980 over time. Overall inflation is the black line there. You can see the very highly subsidized fields like education, higher education, and healthcare have grown significantly past standard inflation, whereas veterinary care, which is not covered by insurance traditionally, has outpaced inflation slightly, but not by much. Veterinary care, obviously, lower stakes there. But generally speaking, it's medicine for animals. The price has not increased really past inflation. Now, I think there are limits to where the free market can go, right? There are, at the end of the day, the competition spurs innovation, which spurs productivity gains, which lowers the cost. But health and education are quite difficult to automate. A lot of people find value in having a personal connection with their doctor and don't necessarily want to just be talking with a chat bot or some piece of technology that you could scale. And at the end of the day, there's a phenomenon in economics called Baumol's cost disease. And I think the quote in the blue box kind of explains that. He talks about how human ingenuity has devised ways to reduce the labor necessary to produce an automobile, but no one has yet succeeded in decreasing the human effort expended at a live performance of a 45-minute Schubert quartet, much below the total of 3 man-hours. And the idea is that people, you just can't, you can make a recording, of course, but if you go to a concert, that you can't really increase the productivity of the artist. And yet, in order to have people that are willing to play in an orchestra, those wages have to keep pace with other productivity enhanced sectors. So in basically that increasing productivity elsewhere raises the cost of these less productive sectors. And so that's a reason why, maybe there might be limits, even if you were to expose all of healthcare to the free market, why it might not ultimately lower costs as much as we'd expect. So those are kind of the 3 main problems that this program was kind of intended to look at. Ultimately address aspects of them. I would not be, I don't think it's a silver bullet by any stretch. But what it could do is you strip down that benefit plan, you offer an option for much lower premium costs because you're excluding a lot of benefits. And then it also facilitates that individual buy-in, right? Because you're merely mitigating that adverse selection. And then finally, you are severing the non-shoppable components of healthcare from the shoppable stuff. And we're exposing that shoppable stuff to, at least on the margins, a little more free market activity because now people are paying on a cash basis for everything that they can shop for. At the end of the day, enrollment in this program would be fairly small, would likely not dramatically change the market across the state. But so I do want to make sure these are presented in the appropriate context. But those were the main objectives of kind of offering this plan. So I can pause there for any questions on kind of the purpose and the problem, but before we have some slides now on how this might be executed. One more time. Okay. All right. So how would this work? this would really only cover those catastrophic, and I mean that in a very specific sense, again, non-shoppable services, right? So things like ground EMS, emergency medical transportation. When you're unconscious, you're not choosing which ambulance company you're going to, call and say, hey, I want this ambulance company to pick me up, in 911. That doesn't never happens. Non-elective hospital inpatient and associated physician and drug cost, and then potentially some post-discharge outpatient and office costs. So the idea would be you look at each episode of care. So you'd say, again, you get attacked by a bear, not to use that tried example, but this is kind of where that pun came in. You're going to have the full, you're not going to choose the ambulance. You're not going to necessarily choose the hospital you're life flighted to, but ultimately Bear Care will cover those costs and then cover potentially post-operative and rehabilitative costs associated with that anchor episode. That was kind of the idea that we thought about. You could also add various options for cost sharing, right? You could have copays, deductibles, and everything tiered to try to reduce the cost even further. But at the end of the day, the benefit plan is pared down significantly, and we'll talk about kind of exactly how that cuts down the cost. Mr. Chairman.
So help us understand those unique situations where the episode then may require ongoing services for the remainder of your life.
Yep.
Do you bifurcate it sometime, or is that included as the result of this non-shoppable event?
Mr. Chairman, that's a really good question, and I don't have a good answer for you. And I want to just say we did not flesh out this idea 100%. This is a concept of a plan, as it were. And the idea is to at least, if this is, we don't want to put a ton of work into something that is a non-starter. But the idea would be it'd be somewhere in the middle. We would not be covering a lifetime of benefit, but you'd certainly want to cover something related immediately to that anchor event.
And I agree. And it's just, I throw that question out there just for us to be thinking about the structure of this as we look to move forward, because this presentation is not intended to be definitive, and neither is the bill, but we ought to be thinking about those nuances that we should consider to make it, if we should implement it. Senator Love.
Mr. Chairman, thank you. So just thinking of one of my own experiences, our oldest daughter was born and was called for flight for life from Cheyenne to Denver. At the time, the chopper was tied up somewhere else. So they sent flight for life in a ground ambulance. And when we got that bill back, they billed us 100% because she didn't actually go through the air. She went over the ground. Would this cover that? Even though the bill was from Flight for Life, the team was Flight for Life, they billed us a ground transport and we had to pay 100% of it because nobody'd cover it.
Mr. Chairman, Senator Love, assuming your family had bought a Bear Care policy, then yes, that event would be covered.
Okay.
It would not just kick in though retroactively for people that had not bought this policy.
And it's important to remember on a non-shoppable event, you didn't have a choice to pick the ambulance or where to go. So that's the nuance that fits into that.
So, Mr. Chairman, importantly, the things that were not be covered is a lot of important things. You can see the list on slide 23, non-exhaustive list. At the end of the day, what distinguishes these is these are all potentially shoppable, right? You can generally foresee these need of these things and potentially have time to shop around for these things. So that was the line drawn. We're not trying to say this kind of care is less valuable. It's trying to say, do you have time to think about this and maybe find a provider who works for you and shop? That's really the distinguishing criteria. And that's, I think, the line you would want to draw for this particular plan when you're thinking about any particular benefit.
So Franz, then I would assume, as you guys think of this will be where you receive the most pressure or pushback to expand the coverage of Bear Care. We heard yesterday how valuable it is and the savings that comes from primary care. So then the argument would be, wouldn't be worth a few pennies here to save dollars here. And I'm not making the argument one way or the other, but I think that those are the things that we have to keep in mind. Director Johansson, please.
Thank you, Mr. Chairman. It's an important point, and I think it's already been hit on already with this concept that Just a quick correction to my deputy here. We started talking about this concept 4 or 5 years ago, as we saw potential changes happening to the ACA, to the subsidies. It made sense to include it in our rural health transformation application originally to the feds because of that existence of the perpetuity fund that could act as the claim reserve. So just a quick clarification there. It started, I think the pun of the name was bus care, get hit by a bus.
Chairman, there's no public transportation in Wyoming.
And then we
That's why
thought bear just makes more sense for Wyoming, given our forested areas. But the point that you made, Mr. Chairman, and that Senator Love brought up as well, you think of it as a continuum. So if we're thinking truly catastrophic, major medical on one end of the continuum, and then your much more generous, Cadillac and gold plans through the ACA as just as an example, you can think of it the same way. So if you took the bare bones catastrophic plan and then policymakers wanted to tack things onto that, a pharmacy benefit, a direct primary care benefit, that would all be possible, but you start to add those costs that you would price into the consumer at cost, and you start approaching the other continuum. So it really, I want to be very clear here, as Deputy Fuchs mentioned, all of these services that we're saying in this concept would not be covered, especially from the Department of Health's perspective. There's no value judgment there. These are important things that people need, and that we try as a department to encourage good primary care, to encourage wellness, to encourage mental health access, et cetera. So it's a difficult conversation, but I think in the context of what we're tackling here in this task force, which is the cost of health insurance and the cost of healthcare, discussing and debating the option is important. But it should be known you can tack things on if this plan were launched. It just comes at a cost, and that would then be passed on to the consumer if it's being priced at cost.
But that's really important, task force members, for us to realize as we contemplate how to structure as we move forward. I'd also note that no one should be surprised that they'd had this idea in the back room being distilled 5 years ahead of us understanding. We just really have great people in the Department of Health who do great work, and their minds just spin. In fact, I would just say I did not like that predatory vultural look of Eric's friends yesterday as they was sitting there, as they kept looking over at Franz. I think we need to confiscate your phone and make sure. Yeah. So
Non-compete, Mr. Chairman.
there you go. There you go. Please. There you go. Franz, please continue.
Yes, Mr. Chairman. So ironically, we talked about the multi-payer claims database yesterday. We use this information because it does reflect essentially, data from our own state plan back in from 2014 to 2020. And you can just, as a ballpark, these are, essentially the total cost of the premium broken out by service. And, generally speaking, you can, I'm not an actuary, I can't price this for you accurately, but as a ballpark, you can say roughly half of the premium would be in these shoppable benefits, and the other half is in these non-shoppable benefits. That's our estimate, and that's again for a population that's commercially insured, kind of would be on the potentially shopping for ACA plans, and is the approximate demographics of the state employee pool. That's kind of what our estimate comes down to.
Please.
Mr. Chairman, I'm sure this has been covered at some point in one of your presentations, but what about cancer, right? Unforeseen.
Yep.
What about a smoker who gets cancer?
Right. Mr. Chairman, Madam Co-Chair, I think, there's not a really good answer here, and Bear Care is not a great answer for that. I think what you can contemplate is if this came on emergently, if there was no notice and you went to the ER, coughing blood or something, potentially you cover that episode for a period of time, but you're not, if you were to kind of keep these people on the plan for much longer than that, it would again start spiraling those costs and driving the healthier people out. So there's no real good answer for that kind of question. Any kind of people with real significant health conditions, where the socializing function, where we take the risks and we socialize and we spread the cost of those risks across society, whether it's cancer or chronic disease or really high cost specialty pharmacy. That's a decision we made as a society to kind of subsidize that. And the Bear Care doesn't do that, doesn't do those cross subsidies.
Mr. Chairman. Just to add to that, Madam Co-Chair, I think there's, the way I think about it is two different mechanisms you have. So it's the things you cover or not, a menu of services. In this concept, we thought about it as anchored in that emergency event. And it very well could be if the policymakers decide, hey, if someone gets a cancer diagnosis unexpectedly. The second kind of dynamic there is time. So generally speaking, in the health insurance industry, you think of open enrollment periods, you think on some sort of calendar year. And so if in April, a Bear Care member was diagnosed with cancer, the plan could be set up to cover that until the next open enrollment period, where we'd say, hey, you will need protracted medicine. That's not what this plan is for. We need to navigate you to an ACA plan or figure out if you have an employer offered plan, those types of things. So it's the things you cover and then the time that you cover them that really determine if the plan would act as a truly, catastrophic and low cost benefit.
But you could find yourself then doing the same thing we find with the expansion population, whereas they may be in the federal poverty range that they can't get any subsidies through the exchange, nor can they don't qualify for Medicare, nor does their employer provide anything. So they could ultimately find that they're left without potential, right?
Mr. Chairman, that's absolutely right. And we have, some precedent for that happens now in the department. We have a colorectal cancer screening program that provides for certain income individuals free cancer screenings. We really want to promote that because you can catch cancer early, you can really save lives. But there are situations where that cancer is detected and then we say you need to, receive care, and they say, well, I don't have insurance, et cetera. So that problem exists. And not to oversimplify this because it is a serious issue, but in that hypothetical that we're talking about with the cancer diagnosis, you're right. You could have someone at 400, 500, 600% of the poverty level that's not going to qualify for ACA subsidies. However, with those plans, as folks in this room can speak to better than I can, there's an out-of-pocket maximum. So that consumer would have a decision to make. Yes, this might be expensive through premiums and cost sharing, but if my out-of-pocket maximum is X, $10,000, $15,000, $20,000, what's my willingness to pay for a plan, knowing that I potentially have a terminal illness? And again, I hate to be so crude with a hypothetical example, but I think those are the things to wrestle with a state policy decision in a plan like this.
Agreed, and that's why we're having the conversations, Madam Chairman.
Yeah, so the timeline concept is really critical to me to understand whether or not this is worth the effort. Just because I struggle in understanding the rare scenarios where someone would need lightning strike care, right? Because if you're in a car wreck, your car insurance will cover healthcare costs, depending on what type of plan you have, which you should go look at your car insurance coverage and go increase that today. Because we can get you the lowest plan and affordable rate is actually a bad idea for you in light of how low car insurance coverage is. So just a side note from your local attorney. Attorneys' coverage on their car insurance is high. So, I mean, that's the primary source, right, in a car wreck. And then you have uninsured motorist coverage in the event that occurs, right? Then if you fall off the roof of your house, right, your homeowner's insurance also provides some of that coverage for healthcare related costs. So it really is going to be a pretty rare circumstance. If you get hurt at work, you have workers' compensation coverage more likely than not. Where you get attacked by a bear or struck by lightning or some other freak event, so I'd call it freak coverage care is what I would call it, or lightning strike care for when that would be the only source of, the only source of funds to pay for your medical care. So that's kind of what I'm striving at, unless we are going to allow for, I think, what most people fear the greatest, which is a cancer diagnosis or some other, catastrophic illness diagnosis that they do have an immediate safety net. And then they have to be prepared to find an exit strategy. And if that's clear to them, then people can plan for that. Just like they're planning on, where they're paying out of pocket for primary care services. But they may not have saved enough to be struck by lightning and to pay for the life flight. So I mean, I think that timeline is what we really need to focus on. Because I think I really support this concept, but only if it makes sense for a lot of people, not the freak accident folks.
And to follow up, if I may, a question is, so then I've got automobile insurance, I've got my home insurance, and we have Bear Care. Who's the payer of last resort?
We'd put that in statute.
Mr. Chairman, if this was implemented, we could certainly go after those other payers. We do that with Medicaid.
Okay. Just bear in mind.
And Mr. Chairman, Madam Co-Chair, I would just say your point, we haven't really focused on the diagnoses that cause this. I think the real thing is, are the services shoppable? And did you know about this chronic condition or condition before you bought the policy? I think those are the main things that we'd be looking for, or that a plan administrator should look for in this concept.
Mr. Chairman, this is super exciting in the sense that what I'm thinking about is, based on my world, is, you've got COBRA for 18 months and then you convert it. I don't know all the details of other than perpetual income, but it would be interesting that whatever the emergency episode was, again, how plan design is established, whether that covers for 90 days, 18 months. And we don't want adverse selection, and I'm not equating this to like an Affleck type situation, but you reach an 18-month treatment of whatever that emergency episode is, maybe they can purchase at a higher premium, dare I say less benefit, so there's more out of pocket, so that they can continue some sort of care for that spinal injury or cancer or something that pops up. But obviously plan design would play into how could we extend that benefit, and albeit maybe imperfect, if we don't want to kick the can down the road, but trying to fix this problem, maybe we can make the can a little smaller, right, that we've kicked. And it certainly sounds like the people that are going with nothing, this is potentially huge in that uncompensated care, that at least there'd be some sort of care that would fix a small leak in the bucket, right? So.
So, Mr. Chairman, just to continue on slide 25, you can see back in 2020, the EGI state employee plan per member per month, which is essentially the base of what forms a premium, was $600. And we are estimating it's around half of the Bear Care fee or whatever you call it could be priced at around half of that, assuming you were paying commercial rates, which is a question that would be another question we raise later. So what does that do for individual buy-in, right? There's no subsidies here. There's no mandate. This would not be considered a qualifying health coverage for tax purposes. So you can't, tell the IRS you actually have a compliant plan, but there's no penalty now anyway. So this would be essentially something that's really buy-in at cost. I think it's really important to note voluntary, and they would expect to pay the full freight. If you can avoid adverse selection, that's sustainable. If you start getting to adverse selection, then it's not. So there is a significant downside, I would say. We talk about we have an agenda item on reinsurance waivers later today. I would say philosophically, reinsurance waivers are trying to fix some of the ACA issues on the margin potentially. This is kind of extending a finger to the ACA, as it were, and saying we're providing a completely separate alternative. And it has some potentially negative effects on the ACA marketplace, right? You are basically saying we're going to take out people that might have bought a bronze plan, and we're taking them out of the risk pool because now we offer a cheaper plan. So now the ACA pool becomes more and more concentrated, right? So in essence, there's a risk here that the federally facilitated marketplace becomes the high risk pool for Wyoming. Now the upside is it's all at federal cost. So you're not having a state high risk pool, but the federal government certainly would be paying all those subsidies for the sicker folks. And I think given most people do receive subsidies on the exchange now, the enrollment probably wouldn't change too dramatically, but certainly the people that have unsubsidized coverage that are still paying full freight for a premium, they're going to find this product a lot more attractive, and that's going to take out enrollment in those plans and potentially increase premiums broadly on the ACA. So there's a risk there. I think it's really important to note. They're very philosophically different approaches to how we handle the ACA as a state.
So I'd like, if I may, Franz, I'd like you to take the two examples. First, the bronze plan and how this could possibly adversely impact a person on the bronze plan in the exchange. And then let's go to those who don't qualify for any subsidies and the benefit that it may provide to them based on the exchange, if you would, please.
Mr. Chairman, I would say that people who receive subsidies will largely be insulated from any shift here. So if you are between 100% and 400% of the poverty level and you receive an advanced premium tax credit on the exchange, if the premium prices go up on the exchange because of we're sucking out some of the healthier folks, then those advanced premium tax credits also increase. And so by and large, the people that receive subsidies would largely not be affected very much. Who would be affected would be if you do not receive a subsidy and the premiums increase. Now you're the bronze plan that maybe you're buying because you're risk averse, right? You feel like you need health insurance, even if you're relatively healthy. It will become more expensive, and it all depends on how many people shift, right? There's a real devil in the details of how much enrollment in this particular plan would suck away from the exchange versus people that are already uninsured, right? So if the bulk of the enrollment is people that aren't on the exchange now because it is too expensive, then it wouldn't have any effect on the exchange. But if you are sucking people out of the exchange, yes, the premiums would likely increase because those are going to be healthier people.
Just one quick note, 4 or 5 years ago when we started noodling with this concept, when the signals were coming of changes to the ACA, the idea, the concept, should this task force or legislature take it up, would be aimed at two groups. We're talking a lot about individuals. So those are, folks we've been talking about in this task force, individuals, families who might be self-employed, the folks that our legislative friends have heard from, especially in the past year, because of the expiration of some subsidies and the apparent increase to them in health insurance premiums. The second, which I think we'll get to on the next slide, is potentially for small businesses, small employers. And there's some esoteric reasons for that, based on what types of businesses under the ACA are required to provide health insurance, generally larger employers, but smaller employers are not. And as we discussed it at one of our first meetings, this, in some of the feedback over the last 4 or 5 years, and also during the Rural Health Transformation listening sessions last year, heard from some small business owners that kind of faced with a Sophie's choice. One, I provide health insurance to my employees, whether that's through self-insuring, a TPA, a third-party administrator, whatever that might be. And year after year, the costs just go up and up and up, and it's killing me on my business, on my margins, et cetera. But not having to provide health insurance, your other choice, which is equally bad, is I won't provide those benefits. You feel bad as a person, you struggle to recruit and retain, et cetera, et cetera. So I think we'll get into how a concept like this could also be targeted at small businesses who we don't hear from a lot in our legislative committees that we roll in the Department of Health, but it's certainly an impact to them and to the economy when healthcare costs and health insurance costs are something that's very difficult for some small businesses to navigate.
So, Mr. Chairman, the director brought us to slide 27 here, which is just as you can allow individuals, it's even better to allow employers, at least small employers, that are under FTE and not subject to the ACA's mandate. If they wanted to provide a bare bones plan as an alternative to nothing for their employees, this could be an option. And I think you could actually extend what services might be able to be offered in Bear Care because you're getting groups, right? It's distinguished from individuals buying in. The adverse selection is less of a problem. So you could offer other benefits if employers wanted. You could offer a Chinese menu of sorts of I'll take the Bear Care plus the primary care benefit plus the generic drug benefit or something. They could check those things and price it and pay it. That's less of a concern when you have groups. So there's, I think, census estimates that around 80% of the 20,000 firms in Wyoming have fewer than 50 employees. So this is the large, large number of firms. This could be, I think, a decent option to buy in at cost. Larger employers, again, if you wanted to extend this, you could develop a product that would be compatible with the ACA mandates. And now we're starting to blur the distinction here between insurance and this product. But at the end of the day, this could be an option for larger employers if the product was designed appropriately. That said, I will say that these two, while the employer buying is almost easier, the real problem we were looking at with BearCare as a concept was for individuals. So that's really the hardest problem to solve. As your co-chairman mentioned, what about the people that need real health insurance, right? That's BearCare is not a great solution for them. It really, I don't want to sugarcoat it. This is really an option for, people that are reasonably healthy, that don't have chronic conditions, that want some kind of catastrophic type coverage. We would want to design and advertise BearCare very clearly on all the limits and all the issues, that you'd want to, the policy parameters, right? So questions like, does BearCare cover all the time? For example, if you get that cancer diagnosis, do we cover you to open enrollment, at which point you have to find a real insurance plan that's going to pay for the extensive, medication, chemotherapy, and whatever else you might need? Or do we, do they stay on BearCare and maybe reset and say, hey, we're not going to pay for that diagnosis anymore, but if you want to keep your low cost emergency coverage, we can, reset. There's a lot of plan design, devil in the details type questions that, are kind of, I think there's a more fundamental question here, which what is the role of the state, right? What is this a good idea at all before you kind of proceed down the trail of what does it cover, what does it not cover, what are the co-pays and such. So at the end of the day, those details have not been fleshed out.
And to the point you was making on an individual who maybe has a chronic condition that moves forward, and you say, well, you can't be covered for that particular condition, but we can cover you on these other issues moving forward, again, is an approach that existed prior to the ACA in traditional health insurance, where you may have, if an employer had coverage, you may have one employee that has a child that had a pre-existing condition, they'll cover everybody else, and you could do a rider on that child that had a unique condition, or elect not to cover or do anything. But that this concept isn't new, and if my recollection is right.
Mr. Chairman, I think insurance has gotten a lot more sophisticated since, pre-ACA plans. So I think it's probably more doable to kind of be more surgical about what's covered now. But I think certainly those kind of policies in the past had that same intent. Yeah.
When you were noodling this for years,
Keyword noodle.
and the primary question is, should we do this or not as a state? And I think it's important to go back to that and to look beyond kind of the immediate value to our current population, and to see how this concept plays into the greater picture of Wyoming. We know that Wyoming attracts a number of new residents as a result of no income tax, right? And no desire to pay into any other revenue system that Wyoming has, and really kind of take without the giving back is a challenge we currently face, right? With the population coming in to Wyoming. They're not young families here to work, building into the system, growing the population. They're usually retirees coming in because we have no income tax. And so, and then they don't want to pay more property tax, right? Because their kids aren't going to school. So I worry that this will be another attraction to the state that will end up taking more than we're able to put into it, and it becomes too top heavy, right? And it's not able to be really truly self-sustaining, and it's not something that we could ever take away. It's one of those things that you could never take away once you provide it. I mean, certainly you can, but There is no legislator who will have the will to do that. And so I want to do this, but I do worry about whether or not it is big picture good policy for our financial sustainability in 50 to 100 years. What were your conversations? Because I actually would like to hear those.
Mr. Chairman. Madam Co-Chair, if I may, two things. And first, a caveat that I wouldn't call these conversations elevated in this concept at that time, but two primary factors that I think could check against that dynamic that you mentioned that I fully agree with. One is for some of that population that you mentioned coming to Wyoming. I don't think this product's existence would be attractive enough to prevent people from enrolling in Medicare at age 65. That is something that most people have paid into their whole life. It's a benefit that we rarely see anybody, even with their criticisms of Health and Human Services, Medicaid, Medicare. Very few people refuse the Medicare benefit. So that's number one. Number two would be, which is a real sticking point for the policy of something like this, is how you price it. So it would not be something that would be offered to consumers as a benefit from the state that's funded by the state, but in its concept, something that is priced at cost. So again, no profit making from the state. And again, at least conceptually, that I think checks some of that dynamic of, okay, Wyoming's this great place with low taxes. We want to move there, and they have this free public health benefit. The idea would be to price anything that the policymakers would put on this plan, whether it's catastrophic or catastrophic plus other services, at the cost that it would require the state to fund not only the claims reserves, but the actual claims themselves.
Madam.
Thank you, Mr. Chairman. Setting the argument about proper role of government aside for a minute, the next thing to me is this a feasible business decision? So my question to you, or my ask of you, sir, is imagine for a minute that you're going to present this to a group of private investors and try to persuade them to initiate this as a business. What would you anticipate would be the greatest objection?
Mr. Chairman, Representative Pendergraft, I think the biggest hurdle, the biggest problem is going to be pricing, the initial pricing decision on this product, because there's so many unknowns. We don't have the claims experience. We don't know exactly who is going to enroll. You're going to make an educated guess based on what's out there, whatever studies you can find, as guessing who might enroll, this might be attracted to, and then try to price those benefits according to what you think they're going to cost. So there's, I think, some risk in where you set that initial price, and that would, I think, largely determine the success or failure. If you price it too high, not enough people are going to enroll. If you price it too low, maybe you can't pay for those claims. So I think the unique concept with the state having sort of, whether it is the role of state government or not, but the state, we do have reserves and claim reserves. So there is some cushion there. Now that's a risk, right? If you have these high cost claims, now you potentially could be out of money, right? On average basis, if you do this correctly, it evens out, and there is no net cost to the state aside from the opportunity cost of where those dollars could be invested, right? If you need them to be liquid, you're going to have a lower rate of return on that pile of money compared to investing in equities or where the state treasurer currently does. So I would say the main cost to the state is that opportunity cost, and the main risk is going to be that initial pricing decision and seeing who actually ended up taking this product up.
Please.
A bit of a follow-up. So if you're talking to private investors, they're not wanting to just break even.
Right.
I'll just leave it at that.
But that's an important distinction. And I think to your argument, this model is being proposed as not increasing profits, it's a break even. So the scenario, if you were looking at it from a private business, it may be more in line as I'm looking at my investors to buy a building rather than renting. And the new building that I'm asking to invest in, is it going to be a break even, or is it going to cost? We realize that and so to be break even, what do we have to add on to our building of our product? And does that make it out of line? So I don't think that the request of the investors is to anticipate revenue generation. It's to be a break even. Am I saying that correct?
Mr. Chairman, that's correct. The intent, if this was a state plan, would be to, you obviously want to cover your reserves and you want to probably have a cushion for your reserves, but you would not be making money aside from that.
Thank you. So just to comment, there is, I believe, a good belief among most of us that we owe the taxpayers of the state a fiduciary responsibility for these trust funds. We do that with our state lands. We try to maximize whatever we can out of them. Are you then arguing that the benefits of the insurance to a select few within the state satisfy that fiduciary responsibility on the risk?
Yeah, Mr. Chairman, I think when there's 144 million of uncompensated care to our hospitals, right? I think that answer becomes clearer. Because if these people in a catastrophic event, struck by lightning, are uninsured, they're going to be life flighted from a remote area, if not in their backyard, and taken to a hospital of which they are required to provide emergency room treatment, of which may require weeks or months of care. That's uncompensated if they weren't on Medicaid or any other health insurance plan.
I think the argument also is in the role of the government, in what is the proper role of government, which we're trying to address here, is who is it, what is the impact on our population? And what I think we're hearing right now is we've got two populations that say all populations are saying healthcare is expensive and health insurance is difficult, but those who are on the exchange with subsidies have less of a burden. Those who that aren't accounted for in the expansion population are really rat-holed in a corner that they can't control. And then you've got the population that's above a 400% that are your economic drivers in large part in a lot of your communities. They're your business owners, they're the small employers, and they're saying, we can't sustain this. And so then is there a role for government not to subsidize their health, but provide an option that they can have health care coverage that the argument here is not a burden back to the fiduciary responsibilities. The intent of this is to be an enterprise model, if you will. So I think that's the perspective I would have on it. Yes, we have a responsibility. Hence, these are really important conversations to have to ensure that we're comfortable that it's the role of government in helping this population of the state or not, right?
Mr. Chairman.
Good arguments.
Just to follow up with the Constitution. So there's a number of articles within the Constitution that address the health and welfare, right? But I think uniquely Wyoming has one provision that says, as the health and morality of the people are essential to their well-being and to the peace and permanence of the state, it shall be the duty of the legislature to protect and promote these vital interests as are deemed necessary for the public welfare. So, I mean, I think, there you go. It's in our Constitution that it is our duty to consider the health and welfare of our people. And that should be the source of our fiduciary duty right there.
And would point out again to those watching in this task force, these are the fun conversations. This is what has the value this group as we flesh out ideas to make sure that it's in compliance with the Constitution, that we're meeting, that we feel comfortable that it's the right role of government or not. So these are all really good questions and good conversations. With that, Mr. Fuchs, please.
Yes, Mr. Chairman, just to follow up a little bit, I think if it were the will of the legislature or the state to price in that return, I think it could be done. You would just add it on to the fee. Now, that's again, it would increase what people are paying, but it would certainly, you could build that compensation in for, not having this claims reserve invested in equities, for example, that could be priced. So not out of the realm of possibility, as well as the administrative costs, right? So that's kind of the next slide here, slide 29. At the end of the day, this is a simplified diagram showing, we have some layer of administration. Every health plan would require this. This might be a little more higher administrative cost than our, I say, current Medicaid, which is around 5 to 6%, because, for example, we don't, as a Department of Health, collect premiums. We don't have that function. You need to have some room of people that is opening envelopes and cashing checks, right? And that costs some amount of money. So there's an administrative layer that doesn't exist in our current bureaucracy that would need to be added for premium processing, as well as the relatively complex benefit design that we're talking about. Which benefits are included, which aren't. How do you define an episode? How long is someone covered for? There's some complexity in designing that those rules for how claims are processed. So there is that layer of administration that has to be priced. Potentially also that return on if we're trying to compensate for not having the reserve invested. But ultimately, the idea is that the premiums are going to be slightly larger than the actual claims going out, and that you have this claims reserve that ultimately we're estimating around $1 million per 1,000 enrollees. That's based on our current EGI reserving policy. And so we would say, this is the amount of money that the state would need to set aside. And so we'd estimate somewhere between 2 and 10,000 people might ultimately enroll in this initially. And so that would be kind of the magnitude of dollars that would be sitting as far as a liquid requirement for that reserve. The state could reduce that need if you wanted to purchase reinsurance on top of that, right? So those, if you're higher, your tail of claims, you buy a premium for that. But at the end of the day, the state's, that's not that comes at higher cost. You're trading cost for risk in that scenario. So if you can afford a larger claims reserve, it's generally lower cost to do so. At the end of the day, this operations is really intended to be this balancing act of you have the claims going out, and on an average basis, you have to replenish that reserve with the premiums you're collecting. Given that you're going to have high cost claims, that claims reserve acts as a shock absorber to try to take that $1 million claim and then gradually gets built back up to handle the higher cost claims in the future.
And so there's two, I think, important components, and it comes back to Representative Pendergraft's notion and our Constitution. So then I think the fact that they're paying back in premiums to cover the cost of the claim and to build the reserve helps in the 16.6 conversation that we're providing a benefit directly to an individual because they're paying for it. We know, to Representative Pendergraft's point, valid point on general funds or state funds, which we have to be careful with, is there's going to have to be some source of funds to begin with. You can't say we'll build up a reserve. We have to use it. But I think the intent is the premium would be structured as such that you get that reserve build up and be off that, right? So just as we kind of noodle. And by the way, is that a postdoctorate degree, or did you just get a certificate in noodling? Certificate.
So, Mr. Chairman, this kind of gets to the conversation now, aside from the actual nuts and bolts of, what is the role of state government? And I think, we're sort of agnostic. We'll do whatever is requested of the legislature. We were taking these considerations just to present you with our perspective here. Why is the state government positioned to do this or not? And one of the answers is this is currently illegal for private health insurers to provide this kind of product. The ACA covers all private health insurance plans and requires those 10 essential health benefits, and they simply cannot offer this product on the exchange or any other market. And so we would be able to, using the police powers of the state to administer a public benefit program that's not insurance specifically. It's not a premium, it's a fee or something, whatever. I'm not a lawyer. I'm not going to advise on the legality of this ultimately, but we believe that the state could set up a program as we do, for example, colorectal cancer screening, not insurance, but nonetheless a benefit program that we operate for a very specific population. That's a reason to do this. Compared to letting it to the private sector. Simply put, there only are some niche entities, and the health sharing ministry presentation is germane here because that is one avenue that offers a very similar type benefit on the private market. They are exempt from health insurance regulation, and thus people can buy these health sharing policies or memberships, and it offers a very similar type benefit. Now, I would argue that the state concept would be more reliable than that because these ministries, they work for a lot of folks, but they are highly variable. There's no consistent policy regulation. They have to offer certain things. Many of them offer lifetime limits, say they only cover up to $200,000 of total medical expenses. Some offer, per year limits. The benefits are variable. So this would essentially be standardizing a health sharing ministry like product and offering some backstop of, potentially administrative or regulatory relief. If you feel you've been wronged, there may be a process by which you could appeal. That doesn't really exist currently with health sharing ministries. So at the end of the day, it's similar limited benefits, and I think it'd be kind of a similar population that might enroll in this plan. It just offers a little more standardization and more regulation on that front.
Thank you, Mr. Chairman. Thank you, Mr. Fuchs. I guess I'm trying to understand what is it about the federal level, the ACA that prevents, say, Blue Cross from doing this? Why is it that we have that restriction? And is there a framework that we can create to allow other private companies to do this kind of thing? Because generally speaking, from my perspective, I want to see the private solution to a problem like this. And so is there an alternative that we can do? Is there something, what are the hurdles that we're trying to overcome from the federal level? That is there a way that we can get around that, I guess? And I guess because you have this idea, you're saying there really is no other alternative.
Mr. Chairman, Representative Geringer, we do not see any alternative from a legal perspective. The law is very clear that all these plans have to offer the 10 essential health benefits. You cannot underwrite. There is flexibility regarding these 1332 waivers, but even under those, you still have to offer ACA type compliant coverage. So the idea of stripping down a benefit plan to just sort of catastrophic or non-shoppable type services is on its face completely not allowed by federal law.
So then what's the distinction between that and the Christian ministries version of it? Why can that not be done in a broader sense, I guess? Why can't a private company do that kind of thing? Is it just because typically they have to be on the ACA in order to even compete? I mean, I'm trying to understand why there isn't that niche also for, and maybe BCBS can explain a little bit why they can't create something separate from what their normal route of business is.
Mr. Chairman, Representative Geringer, my understanding is that there are very small, very specific loopholes in the ACA for things like Farm Bureau plans, and health sharing ministries are one of those things where if you have a bona fide religious association, there's some exception for these ministries to do the health sharing, but they are specifically accepted in the ACA. So that's the reason why there are these potential alternatives, whether it's an association health plan or a Farm Bureau plan or a health sharing ministry. They've been specifically allowed to do that through the ACA.
Mr. Chairman, Representative Geringer, Mr. Fuchs, Yeah, this is something that we need to look at a little bit closer as well. I totally agree with virtually everything that's been said today, that under the ACA, we could not offer a plan like this as a health insurance company. I think even with the state getting involved in quote unquote health insurance, I think, which is what you've mentioned, the Public Service Health Act defines what health insurance is. And under the ACA, if you're providing health insurance on the individual market, you have to have those 12 essential health benefits. Now there's accepted benefits, which has also been mentioned today too. In addition to the health share ministries, you can also have limited duration plans, which is something that's been mentioned before. You can also have hospital indemnity, which this feels a little bit like hospital indemnity, which, like a Geico or Aflac would offer. So $1,000 a day for, a hospital admission would be the benefit that you would receive. That's not considered health insurance. So that can be done in a lot of different ways and would not be considered health insurance. So for us, you can have third-party administrators, whether it be Blue Cross or someone else like an Aflac, administer these types of programs through the network that they set up in order to do it. But there's some regulation behind that too, even at the insurance department level. So what we're talking about here, if we're looking at truly offering like a health insurance benefit that's not just an indemnity, 1332 waiver, which is what we talked about for reinsurance, is a possibility, because really what that is that's the waiver that you would get from the federal government to sort of chop up the ACA and the benefits that the ACA provide. So if you created an extra layer at the state level to just tackle and address catastrophic issues, you could do that potentially, but you'd have to go through that entire process. So a catastrophic plan, as defined by the ACA, is not what we're talking about here. A catastrophic plan under the ACA has to offer those 12 essential health benefits. So if you have a $25,000 deductible, I think you have to think about that, because you're asking yourself, is that a benefit to a member, even though their premium is extremely low potentially? If they had a $1,500 premium on the exchange that covered all things, but then they have this that covers a very limited amount of things, but that limited thing happens, then they're stuck with $25,000 worth of expenses that they wouldn't have had they had an exchange plan. So I don't know if that answers your question, and I take any follow-ups if that's helpful.
Go ahead. Please go ahead.
I'll try to be brief, but before we get too far down this road, I want to plant a seed in people's minds. And in saying this, I appreciate the good co-chair's argument regarding the Constitution. There's a compelling argument there. I don't deny that. About 30 years ago, it was a fad for kids to be wearing a bracelet that said WWJD. What would Jesus do? So I made one for my daughter that said JWHNGHITSITFB. Jesus would have never gotten himself in this in the first place. I'm an idealist. I would like to see government entirely out of healthcare, but I'm also a pragmatist. We're in a hole, and sometimes you have to fight fire with fire. So I understand that. But I wonder if we start looking at these concepts. I love the concept of the catastrophic insurance. I've had Aflac and other things myself, healthcare ministries. But the objection that was just raised here is the ACA forbids it. How are there ways where Wyoming, as just a state, can begin to deregulate the insurance agency or the insurance industry so that they could pick up an idea like this and the state would not have to do it? And I maintain that because of the very thing that Chairman Larson said about, we're going to put the seed money there and then eventually we'll be able to pay that back, that there is a potential there to actually be solvent and maybe even a little bit of a profit in there. How can we as a government do what I think the government's real role should be and deregulate and allow the independent market to do this instead of we just shortchanging it and doing it ourselves. I just wanted to plant that seed and thank you for the indulgence.
And I don't know if you want to handle that or if you want the insurance commission to handle that. So how would you answer that, insurance commission? I mean, where does the federal law come into play, and what flexibility do we have to alter that?
Chairman.
Please. And we're so glad you're here.
Well, I'm not sure I am right now. I would say that'd be something I would have to look further into, just to verify what flexibility would have that. With that, I would go back to one issue that Co-Chairman Nethercott brought up earlier regarding the funding and having the money there. And should we lose, you don't have the funding come in and we have a bunch of major catastrophic issues come up, is this is not an insurance plan. So any guarantee association supports or anything like that would not be there to help bail out essentially these type of plans. I think that's something that needs to be taken into consideration. We have approximately, I think, around 8 companies in the state that can offer some sort of catastrophic plan, not on the ACA marketplace. So that is something else that could be looked at. And then we do have a wide assortment of supplemental health plans, much like you're saying that could be added on to a plan similar to Bear Care, which I guess leads into a question I would have with that is, you had mentioned someone could have Bear Care and then maybe add on other things. Are you planning on that being through this also, or are you thinking they would go out into private market and do that? I'm sorry. The first one I would have to look into further.
Then we'll take her question to either director or Paul.
And Mr. Chairman, Representative Pendergraft, my understanding, and again, it probably maybe better to defer to the Department of Insurance on the answer, but is that the federal regulation of insurance is a floor, and states can certainly add more regulations on top of that. But if the state were to deregulate, it would basically fall back to that federal floor. And so there is no way for us to allow, for example, the 10 essential health benefits as a state to not, to not enforce that. And if we didn't enforce that, maybe the feds would come in and enforce it I don't know exactly how that would work. But ultimately, I think it's the federal insurance law sets a floor for what these insurance plans have to provide. And those essential health benefits are on that floor.
Thank you. And again, I'm not trying to derail the conversation. I'm just trying to maybe think a little bit outside the box. My understanding that if you build a firearm in Wyoming and sell it in Wyoming and it doesn't leave the state, it's not subject to federal regulation. Right? Can we apply that sort of thinking to an in-state health? And maybe this is more toward the commissioners than anybody else. Can we apply that sort of thinking? We're not subject to the interstate commerce. We're strictly trying to take care of our own and comply with the state constitution.
I remember co-sponsoring that bill, and I think it's a fun question to contemplate. I think it's when the services then would extend outside the state, but I think that that's something worth looking at. I'd like to go back. I think the Insurance Commission asked if you were anticipating, if you expanded Bear Care to include, a menu of things, would that just be included in that premium, or are you looking to do that as a separate plan and type of a plan? But if you could answer that.
Sure. Mr. Chairman, Ms. Ranking, I think the concept, at least as we've presented this, is for individuals, they would have to go out on their own to buy whatever else. It would be something for employers if small employer groups wanted to add a certain benefit to their small group coverage, I think you could price that in without the significant risk of adverse selection. But then you'd have that Chinese menu of options or a la carte menu where you could pick those benefits. But for individuals, I don't think that would be possible.
And thank you. And then this may also be a good point in the conversation to note, I think there is an exception around the 10, and asking for your clarification, there is an exception around the 10 essential benefits. If you're self-insured to a certain degree, then I think you have some flexibility there. Am I misunderstanding that, or is that correct?
Mr. Chairman, they're effectively mandated. I think there are, it's a little different calculation through this minimum value. I don't want to get too ahead of my skis there, but I'm pretty sure it's a very similar concept with these essential health benefits, but employers do have more flexibility than is offered on the exchange.
Yeah, thank you. Okay. Carry on.
So, Mr. Chairman, again, maybe the final option here is, assuming, this is really intended to be cost neutral, we believe that at the end of the day, the cost could be lower. This would not be heavily marketed. We would need some additional administrative functionalities if this were the Department of Health that were administering this. But our current Medicaid administration is relatively low, 6%. And again, pending clarification or comment from the gentleman from the health sharing ministries, my estimate, at least looking at the public data that is reported, was that average is around 12%. And so this could potentially be offered at a slightly lower cost compared to that rate. And if the state were to choose to regulate rates, just like it does with Medicaid, you could say, hey, we're only going to pay for these emergent costs, 200% of Medicare or some benchmark. That reduces administrative overhead of, negotiating contracts with every single provider. It would lower the cost compared to private commercial rates. So at the end of the day, except for air ambulance companies, which because of the Airline Deregulation Act are considered air carriers, and are thus federal, regulation preempts any state regulation in that regard. Any other provider in the state of Wyoming could be compelled to accept bear care rates by fiat as opposed to negotiation. So that's an option. It's not required. Certainly could negotiate rates and pay on a commercial fee schedule, but just as a way to keep costs down, that's out there. So, Mr. Chairman, that concludes our presentation. Again, we hope we had a relatively balanced perspective on this. Not something we advocate, just an idea that at the end of the day addresses a concern for this health insurance affordability task force at relatively low state cost and not a silver bullet by any stretch, but happy to take any questions.
And I would just encourage Madam Chairman, just encourage the task force to go through this bill, contemplate what we heard from the Department of Health's presentation, and that's consider what changes we might want to make in this bill draft, and then if we like that, then we would have a read back bill draft or consider and vote on in October. Okay. All right.
Thank you, Mr. Chairman, members of the task force, Anna Johnson, LSO staff attorney. This bill draft is entitled 27 LSO 144 Wyoming Limited and Catastrophic Medical Coverage Pool. The bill draft was requested by Chairman Larson between the last meeting and now as an example of what could be done by the state in the area of catastrophic medical coverage. And a lot of the things that were included within this bill are placeholders. Feel free to ask for amendments or ask questions. I'll do my best to answer them. So starting on page 2, it's indicated that the bill draft is loosely based off of the Wyoming Health Insurance Pool Act, which is actually still in effect until 2030. One notable difference in this draft is that it does not require the pooling of funds by health insurance companies doing business in the state. Instead, funds for the program are going to be provided, at least initially, from rural health transformation program funds. And then the task force will also need to determine whether the Department of Insurance or another agency should administer this program.
Director, he left. Franz, in your conversations, have you felt that that's something that you could be administered? I'm trying to look at the two, the Insurance Commission, Department of Health. Is this something that fits into healthcare financing, perhaps to some degree, to administer? Or or is this something, you have pretty limited staff?
Mr. Chairman, we do a lot of eligibility, a lot of claims processing. That infrastructure could be used for this purpose with tweaks obviously would have to be made. But the main thing that's missing from the health department to administer this kind of program would be that premium collection and sort of member interface. We don't currently do that to any large extent.
Okay, so I would just suggest that we insert Department of Health.
And also in that staff comment, and there's definitely.
Or is that done by a third-party administrator?
Mr. Chairman, we certainly could be done by a TPA.
Okay, this can.
And Mr. Chairman, there is, the bill draft actually does call for a third-party administrator, so.
Let's leave it at that.
So I mean, that could be one of the tasks for that administrator, if you decided to do it that way. As this bill draft went through review, and there's definitely counter arguments to this, as Chairman Nethercott has already indicated. There were concerns that it could possibly violate the donations clause of the Wyoming Constitution, which prohibits loans or donations of state money except for the necessary support of the poor. As the bill draft is written now, it would provide coverage for persons from any income bracket who decided to opt in, not just the poor. However, because pool members will be paying premiums in order to participate in the pool, it could be argued that the medical coverage and associated costs are not therefore donated. And then if you look at section 1, beginning on page 3, we're creating Wyoming Statute 2643-101 through 2643-409. We have definitions of administrator, board, commissioner, department, health insurance, hospital, plan of operation, pool, and this act. And then beginning on page 5, a nonprofit entity to be known as the Wyoming Limited and Catastrophic Medical Coverage Pool is created. And so Wyoming citizens who pay premiums and meet the requirements of the act would then be members of the pool.
And Anna, you note in your comment that nonprofit entity is not something that we use very often in our statutes. Commission might be more appropriate.
Yes, and we don't really have very many nonprofit entities controlled by the state. It's not very common. The Wyoming Health Insurance Pool did use that language, but it might be more customary to make it like a commission or something along those lines. But that would be a policy decision for the task force, so yes.
Can you feel on that?
And so the pool itself is sort of meant to act as an account that would contain all legislative appropriations and all funds received, earned, or collected pursuant to the act. And then the funds in the pool would be credited, the funds in the pool would be credited to the pool and continuously appropriated to the pool for the purposes of the act. And then we have a staff comment on page 6 that indicates that as the bill draft went through review, it was noted, well, and we already talked a little bit about the nonprofit issue. So that would be a policy question for the task force. And then continuing on page 7, we have subsections B and C, which delineate the requirements for the board of directors overseeing the pool. And then subsection D describes the board's powers, which includes selecting an administrator for the pool and creating some sort of plan of operation. And then the board would also set premiums and issue policies. Or alternatively, you could have the administrator do that.
So how does the WHIP program work? Do they have a board?
They do.
Okay.
Mm-hmm. I have another,
So-
oh, go ahead.
So my conscience was whispering in my ear. Is there any reason instead of a board, we could replace it with Department of Health?
Mr. Chairman, I think that would be a policy that's a policy decision. I don't think there's any reason you can't do that.
Okay. Would that be okay? I mean, in all honesty,
Mr. Chairman, as long as we get the new liquor division, no.
yeah, right.
Yeah, I would echo honest comments. We presenting this as a concept. Obviously, there's a lot of devils in the details with how the legislature would like to see it work. As Mr. Fuchs mentioned, we have much of the infrastructure, at least in terms of Medicaid operations, that could be leveraged. Some that we don't. So we're somewhat, agnostic. But I think in terms of how this committee has discussed it this morning, it could very well be the Department of Health.
I just think that the board would come back to the Department of Health or Insurance Commission and say, what should we do anyway? Okay. Madam Chairman, go ahead.
Right, yeah, Mr. Chairman, I think if I were drafting the bill draft, I would have done the exact same thing is to go this route. Functionally, however, knowing what I know in Wyoming, we have a shortage of people with the expertise to be on this board with all the other required services needed out there. This will be a volunteer board who's doing it part-time when they have another job to do. And they don't really have any authority except just to kind of provide this oversight. They'll need to be an executive director, which really should be an employee of the Department of Health. And so my only concern is, just to think about, is the due process components associated with it, and denials and how that works, and then your ability to manage that. So those are my thoughts for now.
Moving on in the bill, beginning on page 8, there's a staff comment that indicates that the task force might need to determine whether to require a flat premium for all covered persons or to determine premiums based on income or age or some other factors as the task force determines. And then subsection E on page 9 describes the contents of what should be included in the plan of operation, and those contents can be amended however you see fit. But it includes identifying an administrator, the handling of funds within the pool, procedures for collection of premiums, and establishment of premium amounts. Subsection F on page 10 indicates that the board may enter into contracts, sue or be sued, take legal action to avoid the payment of improper claims, and appoint legal, actuarial, and other committees as necessary to provide technical assistance or other support to the board.
And thank you, Anna. I want to come back, and maybe it's not the right place, and it comes back to the Insurance Commission's comment on, because this isn't an insurance, then there are things that are not available. Would reinsurance, so if we wanted to help control to some extent premiums and decided that premiums would cover up to a certain cost, then you could have a reinsurance. Could you do a reinsurance? Could you get a reinsurance policy on something like that, or does this fall outside that ability?
Chairman, because it's a state-run program, I am not sure what the requirements or what would be required for you to obtain reinsurance beyond that. So I'm not familiar with how that would work with a state agency.
Rocky? Oh, great one.
Mr. Chairman, I think that the difficulty here, which I was just looking at the Public Service Health Act, is the definitions in the bill that talk about this being health insurance. I think that that's one of the things that the Public Service Health Act addresses, is that health insurance is very narrowly defined. And I'm not so sure that the state plan would fall into that definition, and therefore would also not be able to obtain. I mean, you have stop loss coverage for self-insured or self-funded plans, and you have reinsurance for an insurance plan. So if this is insurance, we would be talking about reinsurance. but I'm not so sure that this can be insurance, because if it is, then it would probably violate the provisions of the Public Service Health Act. So it would be more along the lines of stop loss protection, which is a little bit different.
Would that, and I'm just trying to, as we contemplate structuring the bill, do either one of those. So I'm thinking what you're saying is no, reinsurance wouldn't work, but stop loss, is that something that?
That's what self-funded employers use,
Right.
Is stop loss protection. And this would be something that probably wouldn't qualify for that either, because it's insurance. But again, I
You're
think that we-
teasing with me then, aren't you?
Yeah, it's a bit circular right now, and I'm trying to avoid that and be helpful here. We need to do some research into this too, I think, just because of the potential for adverse selection. But to be helpful, calling this insurance is, I think, problematic. I would just suggest looking under the Public Service Health Act, trying to understand how to structure this in a way that wouldn't require the 1332 waiver, if that's the direction that this task force wants to go. And then after that, when we're talking about different levels of protection, financial protection, we probably would be looking at stop loss protection or some other type of protection that's self-funded by the state.
So you bring up the 1332 waiver, but I don't think we're talking about any requirements 1332 waiver with this, are we? Am I missing something?
Mr. Chairman, I'm not suggesting that's what we want to do. I'm just suggesting that if this is health insurance and it's called and defined as health insurance, the only path to do that would be through a 1332 waiver.
Right.
So if we want this to be something that's not health insurance, you're going to have to work on the definitions, I think. This is structured underneath the Wyoming Health Insurance Pool rules, although it's different. And I will say that the Public Service Health Act does have some exceptions for the state to offer something like this. But I think the problem is the way that it's being defined as health insurance.
Perfect. That's helpful. So we will need to work on definitions and stuff. Thank you. That's helpful. Great coverage.
And Mr. Chairman, I don't necessarily know that anywhere in the bill, this pool is explicitly defined as health insurance. I tried to avoid that. But I will be carefully looking it over in between this meeting and the next meeting to make sure that it can't be categorized as that, or at least try to avoid that.
What page are we on?
We are on page 11.
Perfect.
So on page 11, 2643-403 describes persons eligible for the pool. A person has to be a resident of Wyoming and must provide proof that the person applied.
So committee, I've suggested that they have to be a resident of the state for a year before they can. 5. Anyway, they have to be a resident for a while. Okay, we can flesh that out too. Yes.
If the task force moved on to work the bill, would probably suggest a few minor language tweaks, which we can get to. One on the eligibility section might be to consider certain types of employers or small employers or all employers as defined by whichever department would oversee this.
Yeah, thank you.
Also the person, let's see.
So does it make sense, Department of Health and Department of Insurance, to require proof that they've been rejected? Can't they just by free choice, or Franz?
Mr. Chairman, I'm not sure why we would need the B section. If someone's on Medicaid, there's no way this would be attractive to them because Medicaid is essentially free to them and they'd have to pay the full cost of the premiums. I don't see any reason to exclude folks for any reason aside from maybe the inmates of penal institutions.
Okay.
But they also get health coverage.
Yeah.
So starting back at 2643-403A, like we said, a person must be a resident of Wyoming and must provide proof that the person applied for health insurance and that the offered premium exceeded the pool's premium for substantially similar coverage or catastrophic coverage. Proof that the person doesn't qualify for health insurance coverage, subsidies under the ACA, or proof that the person does not qualify for health insurance coverage under the ACA, period. These criteria are placeholders and they can be amended. You could put all kinds of things in there depending on what the task force decides to do. And then subsection B beginning on page 12 just describes persons who would not be eligible. But like Mr. Fuchs said, I mean, I don't necessarily know that all of those are necessary. It's totally up to the task force.
Yeah, we'll work on that.
Right. The staff comment on page 14 indicates that the task force may wish to consider whether the maximum number of people the plan can cover or the monetary amount of claims benefits one person can incur should be capped or somehow limited. The task force should also keep in mind that this pool could attract people who utilize or need healthcare services. And unless a way is found to get broad participation from people, that includes people who use medical services less or don't use them at all, it's likely the pool premiums would have to be rather high to basically spread the risk. And then we have subsection C on page 14, which prohibits people from being denied pool coverage due to a pre-existing condition. Wyoming statute 2643-404 beginning on page 14 describes how an administrator of the pool will be chosen and what the person's qualifications should be, as well as a term limit. And then the administrator's duties are also described. Wyoming statute 2643-405 beginning on page 18 describes the medical coverage that will be offered by the pool. And then as indicated by the staff comment, the task force will need to determine what kind of catastrophic and limited coverage that this pool will actually cover. Wyoming statute 2643-406 beginning on page 19 requires the board and the administrator to determine a standard risk rate for the pool. And then the commissioner has to approve all premiums and premium schedules.
I come back to 18.
Yeah.
And ask Franz a question. We have in the bill draft catastrophic coverage having a deductible level of 25,000. Do you know if there's anything kind of magic or that helps us determine what that level should be?
Mr. Chairman, we conceive of, again, that's kind of the definition of catastrophic coverage under the ACA is kind of that. It's really looking at a cost sharing level and with all benefits included. And I would submit that the cost sharing is not really the focus of the bear care concept. It's really the limitation on the benefits, right? So the deductible could be nothing. It could be $100, could be whatever. It's really not tied to the definition of catastrophic in that sense.
Thank you.
So I would, Ms. Morgan, I would submit removing this. It's probably not necessary to specify those in statute.
Okay, thank you.
And then moving on page 20, there's also another staff comment. It indicates that the task force will need to determine whether to have a standard premium rate for all persons or whether the rate should be on a sliding scale of some sort. Then Wyoming statute 2643-407 beginning on page 20 indicates that benefits provided by the pool should be reduced by all amounts paid by other insurance, amount paid by workers' compensation or liability insurance. Or
this is our pair of last resort.
Yeah, basically.
Okay.
Yeah, basically. Or any amounts paid under any state or federal law or program. So, yeah. Wyoming statute 2643-408 on page 21 provides immunity for the board and the pool. And then Wyoming statute 2643-49 beginning on page 21 provides that the pool is exempt from insurance premium taxes. Section 2 beginning on page 22 provides an appropriation from rural health transformation program funds to the pool. And then the task force is going to need to determine what that appropriation amount should be. And then the staff comment on page 22 indicates that the task force could choose to have regular appropriations made to the pool if it thought it was necessary.
Mr. Chairman.
Thank you. Go ahead.
Mr. Chairman.
Please proceed.
Please.
Sorry, just a comment. The Rural Health Transformation Program was not authorized to use those funds for this purpose.
Say that again.
Both the legislature and the federal government have effectively prohibited rural health transformation funds for being used for this purpose. So this would have to be some other funding source.
Okay. Okay.
Another great community.
Go ahead.
Mr. Chairman, just to kind of correct the statement. I think I was a bit confused on the definition of health insurance. And, trying to move on my feet there quickly. The one thing I would point out then is I see now that there is an exception made for this program to not be included in health insurance. I think where maybe I got off track was I see the definition of health insurance in here. What I would say though is under 402, when it goes through the powers and duties, I mean, if you look at 402 D3, maybe we already talked about this when I was reading through it, but have the general powers, duties, and authority granted under the laws of this state to insurance companies licensed to transact health insurance. So, I mean, you're effectively giving it the same duties, same rights and obligations as a health insurance company. And I think that would trigger some, that would be potentially problematic under the Public Service Health Act.
Good catch. So again, you're okay with the reference. We use the definition of insurance here so that we can exempt ourselves from it back further in, and you're okay with that.
Mr. Chairman, I would say again that we would need to look into this further to be helpful.
Sure.
I can't necessarily say, being an attorney, I can't provide legal advice on this either, but yeah, but from my client's perspective, we want to be helpful in this situation and provide the subject matter knowledge that we know. Some of this we may still need to go back on, but we can absolutely do that.
Yeah, if you could help us not step in it, it'd be helpful. Okay. Please proceed.
Yeah, we only have a couple more pages left. So on page 23, subsection B, it would require the Department of Insurance or whatever agency you decide to run the pool to report to joint labor annually regarding the creation and the administration of the pool. Section 3 on page 23 requires rulemaking, and then section 4 would provide a split effective date. And that's the entirety of the bill. I'd be happy to answer any questions.
Madam Chairman, what I'd like to do is with that is the entities that we have here on the task force that could help maybe on and now get a more formal draft ready for us to consider at the next meeting. Director Johansson, if we could borrow Franz and no, okay, then that's you.
I think that makes sense. Convincing.
It is convincing.
He's thrilled to help.
He's thrilled to help. And the Insurance Commission, if we could get whoever it's going to be you. And then Rocky, I don't know if you or Dirk could help us on this.
Mr. Chairman, absolutely. We talked to Franz and Director Johannes a little bit about this yesterday as well. When we were talking about the 1332 waivers, we do have some actuarial consultants that help us with some things from time to time. And to be helpful, we've engaged them a little bit on some of the work that we're doing in the task force here. Sure. And I think that was brought up a little bit earlier too, to talk about sort of the financial mechanisms, because those financial mechanisms actually have legal terms and legal functions. So if the legal function of the financial mechanism is insurance, then that's where, collecting premiums and doing those kinds of things, you have to be pretty careful about that. But on the other side of that, I think that understanding what the cost of this would be, what the cost of it would be if you didn't have reinsurance or you didn't have stop loss protection, and then obviously rural healthcare transformation funds aren't available for this. So there's a lot of things I think we could help out on that with.
Yeah. I just need to know the name
of
who's going to help us as we work back through this. Do you want me to use you or Dirk?
You can work with me. Yep.
Perfect. Mm-hmm. Perfect. Because I think you too had Miss Burke for law school.
Okay.
And it's showing. Right?
And we will have one of our actuaries here today. Mr. Chairman, his name is.
Well, so let me get through this. So I'm just trying to establish how we're going to help on and move forward.
Okay.
So we've got.
Thank you, Mr. Chairman.
Commission, Blue Cross Blue Shield, Karen, We'll probably bring you in and then try to get a draft up. And then any legislators that want to join in this call, you didn't have to turn and look away so fast. Does any of the legislators that would like to participate in? Yeah. This is just too fun because I know the feeling. Don't pick me. So I'll work with you and we'll get this done. But if any of you would like to, please, the best thing about it is the benefit it gives you for the future and understanding the structure of this kind of stuff. So yes, go ahead, Director.
Mr. Chairman, I know a more formal bill draft will be worked on, so this can be worked on then. But just to state publicly on the record for Anna's awareness, a few recommendations on the more minor side. If this were worked, I would have moved to per Rocky's point, which I think are well taken. Things that in the bill, when it says catastrophic medical coverage, should probably read catastrophic public benefit. Anything that says premium should probably read appropriate or assessed fees. So terminology is important if we're trying to distinguish between what is health insurance and what isn't, both on the legal side and for the public perception side. So just a quick note to Anna, but I know we'll work through some of those details in a more formal draft.
Okay, thank you. And the employer piece. Right. Okay, thank you. Thanks, Anna, for giving us something to consider, and we thank you. Okay, any other, Senator Love?
Yes, Mr. Chairman, thank you. So just a couple quick questions, because as I read through this, one of the things that made it easier for me to get over the hump was that we were using funds that are already taxpayer dollars in the rural health to start this program and not pulling out of the general fund. And this reads all the way through that way. Is it possible to go back and get approval for this, or has it already been denied as it stands?
Go ahead.
Mr. Chairman, Senator Love, it's a great question. I'll be clear and then very unclear. First, to be clear, in year one, the year one funds of rural health transformation, this has not been authorized to use any rural health transformation funds for the purpose that was originally proposed, bear care, or this catastrophic public benefit. The reason I mention that and where I'll be unclear is there is some uncertainty going into years 2 through 5 of the program per the federal rules. Things can change. Different things could be authorized. Do I feel right now it would be likely that the federal government would change their stance on using rural health transformation funds for both this purpose and the previously proposed perpetuity fund? Probably not in the short term, but that doesn't mean that it couldn't happen. Elections are weird things. Congress can certainly change the rural health transformation section of the One Big Beautiful Bill Act. Again, your guess would be probably better than mine on the likelihood of that. But as it stands right now, those funds are not authorized to be used for this purpose.
Second question.
Thank you, Chairman. So is there a process where before this would go to the floor in next winter, that we could look for a prior authorization or approval from that system that we could have before we tried to make decisions on this? And then the other thing would be, there's a pretty big lift when we start pulling it out of general fund. And we've got a bunch of X's on the dollar figure in here. Realistically, what does this look like? Because it could be really big.
Well, I think what if you read in here, they're thinking about the reserve being $1 million per 1,000 people. And so I think the way you'd structure that is, just from other things that we've had to get off the ground, is you'd give an estimate of what that might look in the first biennium. So we pick a number and fund that from a general fund source. And then as you do your payment structure back, once you start exceeding what you need, then the remainder goes back to the general fund to pay that back. But then the other important component of that is, but what if we exceed our best guesstimate in that first biennium and need more, and so we would request authority to borrow from the rainy day account in the event that it exceeded that. How did I do? Good. Okay.
And Mr. Chairman, if I may,
Please.
Senator Love, we could certainly seek authorization or clarification in our year 2 application for using rural health transformation funds for a purpose like this. There is a process for the continuing application for year 2 of the program. It's a little bit nuanced because in our original application that was approved, this concept was part of it. And then through the subsequent negotiations and final approval of our year 1 application, the concept of bear care was removed, I believe, from the final application. So we'd be essentially requesting to insert that back in. We can do that. I just don't want to get the task force hopes up that there's a clear path with the Centers for Medicare and Medicaid Services to reincorporate it in, but we can certainly make that attempt.
Thank you, Mr. Chairman. I just have to ask, do you think if we change the name from Bear Care to Trump Care, that it might help persuade them?
Mr. Chairman, I liked Madam Co-Chair's freak care, but it sounded too much like free care. So I think there might be some confusion.
Mr. Chairman,
Proceed.
Mr. Chairman, just to add on to what the director was saying about rural health transformation, I think it's far more likely that we could use those funds for infrastructure changes and one-time expenditures. I don't think they would ever approve something like the perpetuity where we accumulate a pile of money that can be used for a claims reserve. They have been pretty clear that it has to be spent every year and over a 5-year period.
So with that said, if it was the pool, the reserve account to pay claims, and you paid the claims out of it, that has far more potential than having that pool just sit there.
No, Mr. Chairman, I would just say that the most likely, if we were to get approval for rural health transformation funds, it would probably only pay for tooling our infrastructure.
Okay.
So saying, building the claims rules or building the premium collection function or having consultants, those kind of things to figure those kind of things out.
Thank you. Any other comments? Okay. With that in mind, we come to the end of that section. I think this is a good time to take a break. We'd scheduled a break at 10:30. We'll be back here if we can, folks, about 10:35. I know that's an odd number, 10:35-ish. And then we'll get started on our healthcare workforce development. You'll recall at our last meeting, we talked about the importance of our healthcare workforce and how that impacts costs and access to healthcare across the state. And we asked to look at how that workforce training is available. And so we've got Mike Smith, who is kind of filling two roles because he's the commissioner for Wichita, and he is also the governmental affairs at University of Wyoming and deals a lot with the students as they participate at WWAMI. And so he's going to help us walk through that. And Mike, we thank you for being here, and thanks for all that are participating. Former Senator Baldwin and House Representative Baldwin, all around good guy. Baldwin, thank you for being here. We appreciate you driving over from Kimmer and doing that for us. He currently serves on the Wichita board, I believe. Were you the president or commissioner? Thank you. Okay. Huh?
Former senator.
I said former senator?
I just like to stress that.
No, former senator with more emphasis on it.
Yeah.
Thank you. Mike, it's up to you.
Recovering politician.
Yeah. Thank you.
Thank you, Mr. Chairman. For the record, Mike Smith with the University of Wyoming. And as you mentioned, also one of our three Wichita commissioners in the state of Wyoming. I did want to get a little bit of guidance. So,
Okay, never mind. I misheard you. I'm with you now.
yeah. So I plan to just briefly hit on the WWAMI medical education program. And we have the director from the University of Wyoming for that program with us. Wichita, Commissioner Baldwin, the executive director of Wichita is behind me, Demi Mikolau. And also just real briefly, some nursing funding that the legislature has instituted over time. I can give a quick update on the PA program at the University of Wyoming that the legislature directed us to stand up. There's the workforce piece of rural health funding that Mr. Co-Chair, you've had us been looking at with University of Utah for several years. So I can kind of skip over all of those in one lump, or we can, with Fred here at the table, we can kind of just talk Wichita for a second, answer any questions on Wichita, then move to the next one. So I just guidance on what you would find most useful and informative.
Well,
This is kind of fun.
yeah, this kind of, I think we'll give you the flexibility to proceed as you desire. Let's start
Okay.
with everything else, and then
I'm just going to skip through all of them then, because for my brain, I need to compare and contrast a couple of these programs. There's always a lot of confusion, and this panel is well versed, but for the public and others who haven't been dealing with it as long as some of you have, there's a little confusion sometimes on the program. So I'm going to start with WWAMI, WWAMI is the acronym, and that's Washington, Wyoming, Alaska, Montana, and Idaho. Okay. That's a consortium of those states that partner with the University of Washington School of Medicine to send residents of those states to Washington to get their medical degrees and practice medicine. In Wyoming, we tie a return to service requirement. So if you are selected as a WWAMI student from Wyoming, the state of Wyoming agrees to subsidize a good chunk, over half of the cost of your education, in return for you agreeing to come back to the state of Wyoming and practice for at least 3 years. If you do not complete that service requirement, then you're required to pay back all or a portion of that loan from the state, depending on how much of that service requirement you've met. WWAMI started in 1997 with 10 students per year. And over time, the legislature has increased the funding for the program, and today that's 20 slots per year that get selected as WWAMI students from around Wyoming. A very positive change also in that time period is now those students spend their first 2 years of their program, all the preclinical kind of classroom focused efforts on campus in Laramie. And so we've got kids with a Wyoming connection, that residency requirement. And they spend 2 years in Laramie, strengthening that kind of connection to the state before they go to Seattle and study there at the University of Washington, and then come back. One thing I'm going to circle back to, that residency requirement is pretty stringent. I think it's 5 years of the student or their parents, residents of Wyoming, to qualify for the program. So you're not required to do your undergrad at the University of Wyoming, and many don't. But I'll come back to that later, but it's a pretty stringent requirement, and you may want to take a look at that. It's legislatively mandated that way. So let me just go through quickly some of the success of WWAMI, some numbers that you'll find interesting. In that time since 1997, there have been 284 graduates from Wyoming of the WWAMI program who are now practicing medicine, completed residency, fellowship, everything. Of the 284, 172 have returned to Wyoming and are practicing medicine. That's as of September of 24. So the numbers have changed a little bit. We'll be issuing a new report in a couple months to the legislature, and so we'll update that. But that's a return rate of 60.6%. Of that 172 that have returned, we still have 123 remaining in Wyoming and practicing. So once they get here, that's over 70% retention rate. So I think it's been a successful program, and it is achieving that goal of getting students from Wyoming trained in medicine and returning to their home state to practice. 123 physicians currently practicing in Wyoming. 58 of those are practicing in primary care. So moving to, like, is there a way to improve or grow that number? I would just make a couple quick points before moving on. Over time, the number of students, I think this is a nationwide trend, but also here in Wyoming, the number of potential students applying for medical school has dropped. We used to have every year at least 60, some years approaching 80 applicants for the 20 spots. I think this last year it was 40. So, and we could all speculate about why that is, but it hasn't become a problem, but it's a concern if that trend continues, because we want to make sure we're getting a big pool that ensures the 20 that get selected are going to be successful in medical school. And the best way to do that is to ensure there's lots of folks that are interested in applying. And so the 20 we get are the cream of the crop. That's the case today. But if that number comes down much further, then that will start raising concerns, I think, for the competitiveness of our students. In some programs, you could add money to it and grow it automatically. That because of this reduced number of applicants and just facility and resource constraints here on campus in Laramie and at the School of Medicine in Washington, it's not as simple as saying, let's raise it to 25 slots and we'll give you more money and we're going to have more docs. I'm not sure that's an approach applicable in WWAMI, maybe more so in Wichita that we'll get to. But I do want to come back to those residency requirements. One thing we've kicked around a little bit that you may want to consider is thinking about how you might meet that residency requirement to apply to Wyoming WWAMI. One option is if you're a student at the University of Wyoming in your undergrad, maybe that counts. So that's 4 years there, hopefully at least. So maybe there's a different tie. Maybe your parents don't have to live here. Maybe it's a more distant relative. I don't have the answer, not recommending anything, but I think it's something the legislature could look at and change to help bolster that pool of possible students.
Mike, could I ask, what is our enrollment at the University of Wyoming? Is it declining as well?
Yeah, Mr. Chairman, definitely on the timeline of, let's say, the last 6 to 10 years, there's been a decline. The last couple of years has been kind of flat. It hasn't grown enough for me to say we've reversed the trend, maybe stalled it out, but there's some trepidation as we wait for this year's numbers to see kind of if that decline continues or not. Yeah. So that's kind of the quick and dirty on the WWAMI program. It's just medicine. Yep.
Yeah. Mr. Chairman, and Mr. Smith, if you know, this is a little bit outside the course of WWAMI, but what is the average student loan debt then of that med student graduating out of our program? And how does that compare to perhaps the national average, if you know those answers?
Yeah, Todd, you sent me some of those numbers, and it doesn't. I can't speak to the debt per se, but I could tell you that over time, the amount of the state subsidy has just been eaten away a little bit by inflation. So in 2018, the legislature basically paid the cost of 80% of a WWAMI student going to the University of Washington. The student at that time would have contributed almost $58,000 to the cost of their 4-year degree in medicine. That has grown, assuming we get an inflation bump next biennium, that student contribution will have grown to about $88,000 in 2026, and 75% or so of the cost covered by the legislature. So it's a pretty good deal. I mean, not a student myself, but from my perspective, it's a pretty generous program, and but the buying power has come down a little bit, and that's another thing to consider, I suppose. The more expensive that becomes, currently you're a hot prospect in the medical field. You come in, you go, well, I've got this repayment obligation of $300,000 to the state of Wyoming if I don't go back to Wyoming. But in this competitive environment, some hospitals, practices, folks don't bat an eye at that and say, well, we'll pay that off for you. Come work with us. And so that's certainly a possibility. Any other questions on that? Okay, thanks. The WICHE program, Western Interstate Commission on Higher Education. Yeah, I love these acronyms. WICHE is different from WWAMI in a couple of ways. First, I just say WICHE there's an interstate compact the state of Wyoming joined, and it's set forth in statute. I believe in the mid to late 1950s is when we first joined that group. And it's broader than just medical education. There's a bunch of different programs and expertise. We pay as the state of Wyoming dues to belong to WICHE. Fred, myself, and Dr. Joe Schaefer from LCCC serve as the three commissioners. We go to a couple meetings a year. Fred is involved in more than that. And at any rate, dealing with all kinds of issues across higher ed. There's a very popular program you may have heard of where undergraduates can go from Wyoming, can go to other WICHE schools for 150% of in-state tuition. We offer that same opportunity throughout Wyoming, community colleges and the university to out-of-state students. So there's all that kind of stuff. So I'm just going to focus. I could talk forever about great things about WICHE, but I'm just going to focus on an acronym, PSEP, PSEP programs. And those deal with professional, mostly healthcare professions, but the program design is similar to WWAMI. The state subsidizes a piece of that tuition for those programs in return for an agreement to come back to the state of Wyoming and practice for those 3 years for the forgiveness of the loan, or pay it back if you don't. In 24-25, there were 91 students across the 4 years of their various educational paths using PSEP dollars and studying 9 different fields. Veterinary medicine is one of those, but physical therapy, occupational therapy, physician assistants, and as well as medical school and osteopathic medicine. For physicians, for the osteopathic and allopathic, 17 total students at some point in their 4 years being subsidized by the state of Wyoming. So in addition to being a broader program, not only focused on physicians, but it impacts fewer numbers. If we're talking about how are we growing the number of physicians coming to Wyoming, WICHE is a great option for a student who doesn't want to be going to Washington for school, but there's only, let's call it 4 a year instead of the 20 that go through WWAMI. The programs, another interesting distinction. So the programs the students pursue under WICHE are not offered in the state of Wyoming. That's kind of, we have acquired an existing occupational therapy school at UW Casper that University of North Dakota had run for years. Once that program has transitioned to UW fully, the WICHE commissioners will not allocate dollars to occupational therapy students because we can provide that training here in the state. So it is focused on programs not offered in Wyoming. The same will be true when the PA program gets up and running. So this is though an area, because students have freedom of choice, right? They pick WICHE schools, participating schools across the region. WICHE is not constrained by the issues I talked about with WWAMI, with space or number of faculty or those kinds of things. So it is an area where if you chose to say, we'd like, instead of 4 a year, we want 10 students a year, you have mechanisms to do that through increasing funding or directing the commission in some way to focus its funding more on one field over another. And speaking for Fred, you can correct me or add to it, but I think I'd love for you to take away from this. Maybe it's not a task force or working group item, but something a little longer term. We would love some guidance from the state. We don't really have a mechanism set up in Wyoming right now where policymakers are communicating to us 3 commissioners, you know what, appreciate that kids want to study X, but we want what most important for our workforce, we want to see you focused on funding Y. We would love to do that. And we'd love to think a little bit about the funding mechanism for WICHE. Currently, This year, it being the budget session, there are students who have had to apply to school back in September. And then they apply for Witchy and they get a letter with like the biggest list of legal disclaimers you've probably ever seen that basically boil down says there's no guarantee that there will be money for the program you're applying for or that there will be enough spots available.
Thanks, Mike. And so if you would allow me, task force members, as we talk about what we could maybe do in this regard, we really do put the funding of Witchy and the decision-making process of Witchy, I'm going to submit and then ask for your appraisal of what I've said is awkward at best. And I think it's awkward because we don't give you much guidance. So they're starting a senior as their last year going out of with their bachelor degree, they're making applications into postgraduate schools. By December, maybe in January, they've been accepted. They might, but we haven't allocated the next year's funding. And so we're saying, well, you qualify, but that doesn't mean you'll get the spot because we haven't got the allocation until the end of June. And so what oftentimes happens is you get to the end of June and you might find, depending on the disciplines that you're funding, and they have different requirements, that you could have a couple of these kids who thought they qualified, they did qualify, but there's no funds for them. And it's too late for them to look in other schools or find resources to do that. So one of the things that we could consider doing is making a recommendation back to the Appropriations Committee is to fund a year ahead of time based on the estimated slots that would meet the Witchy needs. How do we determine what those estimated spots would be? Was to give them the priorities of the disciplines that the state needs. Then the other problem that we have with the Witchy funding is we do it biennially for each year. And what the university and even worse, our students have run into is in times of a downturn and the University of Wyoming is forced to make cuts, sometimes they'll cut Witchy out of the general fund appropriations. And so because that student is in medical school, let's say, and that cut has been made, all of a sudden, they're in a year that they thought they'd be funded, and they're sitting there without funds, which is kind of, they have no idea how our funding system works. They're just taking it for granted. They got into this program. It should see them through the full 4 years. So then I think we should step back also and recommend that each time we fund each year, you're funding that cohort for the 4 years. And then there's no question that they get through that discipline. Now, if somebody quits early, we've got the mechanism to get the money back, and then you can determine if there's excess revenue, what they can do. But then that helps you plan. That would help these guys plan it would make their planning much easier. And they wouldn't have to come back each biennium and say, okay, we've got these kids here, these kids here, these kids here, and we've got these applications out here, and we've got this pot of money. And how do we do that? And so I think that we need to take some real consideration in maybe reconstructing that funding system and mechanism to add clarity and simplicity for the kids. Is that a fair appraisal of that, Mike or Fred?
Mr. Chairman, Fred Baldwin, Commissioner of Witchy. A couple of things I've just add on, and then maybe Mike can comment some more. I think you're on the right track, But I would add additional to that is that the funding, the dues that we pay for Witchy. As it stands now, every 2 years that comes up and they're like everything else. The inflationary rate changes. And to be honest, every 2 years, the legislature's been faced with, okay, now we have to fund this at a different rate, at a different rate, at a different rate. If there was something on a more automatic level, so we don't have to face that every time. Perhaps your co-chairman would remember last budget session when it came time for things to be cut. One of the things that was brought forward to cut was the Witchy budget in its entirety. In my own opinion, and this is my own opinion only, is that I think there's lack of education on Witchy and Whammy, but especially on Witchy and on the part of the legislature. If you were to go talk to the 93 legislators today, I would suspect that at least a half of those legislators won't be able to tell you what Witchy even is or what that acronym stands for. Further, I would challenge this committee to go out to your own communities and go ask your optometrist, your physical therapist, your occupational therapist, et cetera, if they know what Witchy is. And you're going to find that a good majority of those people went through Witchy to get their education and came back to Wyoming. Now, that being said, it's a difficult thing to make people come back to Wyoming, right? This is an incentive. It's a carrot. It could be considered by many to be a cheap loan. Loans are expensive. This is not an expensive loan. As a matter of fact, one of these entities doesn't pay anything back to the state of Wyoming. And I'm not going to go down that rabbit hole now, but that's something that the legislature needs to look at further. Those who have been on the legislature a while know that's a passion of mine, and we've discussed that at length on the floor. But I think a big piece of this is education to the legislature. I know that Demi behind me, I know that us as commissioners, that we can perhaps take part of that, but I think the legislature needs to take the lead and set up something where we can educate the legislature. Because I just don't think everybody knows what this is and what they're responsible for and what we're capable of. It's a tremendous program. And as I say, you're going to find a number of your professionals around the state went through this program. There used to be a number in the legislature that went through this program. One of those being a senator who's a veterinarian, one of those former senators who used to be an optometrist. There's a number of people in the legislature and around the state who have gone through these programs. So that would be my piece, but I think that we need to educate, and I think we do need to establish some sort of mechanism, perhaps through appropriations or however that may be through this committee, but we need something more automatic and something that's more fair to the students. It's very awkward now. And realize that every profession, every one of those 9 things that Mike talked about, they're all different. They all have different timetables when you apply. The veterinarians may apply differently than the PAs may have. And realize that each one of these professions has a number of schools. A PA may choose from any number of schools where he's going to go to school. There's one in Colorado, there's one in Utah, there's one in Montana. They're everywhere. Same with all the professions, and they all have different timetables. So it would be easier on the students, easier on the state of Wyoming if we could make something a little more comfortable, a little bit more. And Mike may want to add to that.
Mr. Chairman.
Thank you, Mr. Chairman. When a student enters the Witchy program, is there not a contract involved? And why does the state not be held, if there's a contract, why is the state not held to being able to fund in accordance with the contract?
Yeah, Mr. Chairman, Representative Pendergraft, I'm going to answer your question by tweaking Chairman Larson's observation on the challenge of the funding. First of all, I just want to note Witchy is its own department in the budget process. So cuts to the University of Wyoming budget don't automatically translate to a cut in Witchy. Witchy's Department 069 and has its own budget and sustains those across the board cuts on its own when the governor and the legislature adopts the governor's recommendations and so forth. So the funding challenge really, I'm not aware of a student who started a program and was told they could no longer receive money. But what has happened is because of cuts and reductions in amount available, all Witchy could do was basically fund continuing students. And so that's what we do first, right? Our staff goes through and says, here's the number of students we have in all these programs. This is how much money we got to have to cover them. and here's what's left for one doctor or one PA or whatever. So that's, and I've only been in this job 4 years, so maybe that has occurred in the past, but that
Mike,
is the challenge.
to that point, in 2021, when we had the very severe cuts, we cut them and we had medical kids down at the University of Utah in their school of medicine that all of a sudden the university come to them and says, you don't have any money. And then you say, and I agree, is there no obligation? If you look on most of the state contracts outside, it's always pending funds available. So that you can be right in the throes of things. And then if the legislature changed something, then that negates that. That's why I think funding each cohort for the full 4 years really eliminates that flaw.
Thank you, Mr. Chairman. Any other on that point? I'd be mindful that of time. I'm gonna just quickly go through. Staff had talked to me some months ago about nursing in addition to the WWAMI WICHE. So I just want to let you know a couple points about nursing for the APRN or doctor nurse practitioner students. There is no state program that is subsidizing those folks. We do, I have to say, have a generous scholarship from Blue Cross Blue Shield, funding 5 of those students each year at $11,000 a year. So thanks for their support, but no state dollars. There is an existing legislative program on the books that has not been funded since 2010, I think. Statute 2117-116. And that was designed to encourage psychiatric mental health nurse practitioners with a loan program. And so if that's an area of focus or interest, there's an existing mechanism on the books that has not been funded. And that kind of funding that program or looking at a WWAMI WICHE style return requirement for those nurses would be something for you all to consider. You may have heard of the BRAND program. And these are second bachelor's degree students. So they've gotten a bachelor's degree in a non-medical field and they've decided, you know what, I want to be a nurse. And so we have an accelerated program, full-time program. I think it's I'm going to mess up I think it's 15 months, maybe the 18 months. So, but it's very quick. There is every biennium $200,000 the legislature funds to give a scholarship program or help defray the cost of those students. That amounts to maybe 4 students a year. And the program has 20. And so if that's something to look at, increasing that budget and looking at a return to practice type of a requirement. Most of those students, because of the fact it's a second bachelor's, because of the nature of the program being so intensive and go, many of those students stay in Wyoming and become nurses in Wyoming. So that was kind of the highlights, the quick and dirty on nursing programs. I just tell you that the legislature in 23 directed us to stand up a physician assistant program. That is moving forward in many ways. The Higher Learning Commission, that's the accrediting body, approved our program development this month. That's a major milestone. And so we're moving forward. On the challenge side, we've been unsuccessful in hiring a director for that program in a search in February. So we have reinstituted that search with a new firm and hope to have interviews in September. But as that program received $7.5 million in 23, that's really to do these things we're doing now. As we move forward, there'll be a need for further asks from the legislature if we want to stand that program up. And finally, you all know more about where we stand on the University of Utah deal and the rural healthcare transformation funding than I do. I think I know that there was some dollars in there, but I didn't get educated on how much, but just know that at direction of Chairman Larson and Senator Dockstader, among others, we've at University have been helping facilitate conversations between the state of Wyoming and the University of Utah. Fits and starts as personnel changed in Utah and at Wyoming, but initial good conversations, and happy to work at your direction or at the rural health transformation dollar direction to kind of put that in place as needed. And then vision was 5 spots a year for medical education at the University of Utah. So another way to grow the number of physicians coming back to the state of Wyoming. And
So I might just for that, and Director Johansson might ask you to fill in the gaps, but we had started looking at additional schools. We had asked the university at the time in 21 when we missed this WICHE funding thing, we asked the university to look at other schools. What if Washington, what if WWAMI didn't work well for us? What other schools are available? It took us a couple of years to get through that. And then the year that we missed that WICHE fund, we went down to the University of Utah and met with them. And they said, well, we'd like to have kids here in our medical school too. So we started working with them to secure 5 slots. We had the budget and the funding in place the year we didn't pass the supplemental budget. So then it stalled until this last year when we was bringing it back. The rural health transformation funds became available. Rather than put it in the budget, we thought that that might be a great place to do that without having an impact on the general funds. We had additional meetings with the University of Utah with Dr. Hawes, who's now in the Department of Health, and Director Johansson, if you could just highlight what the decision that you guys made.
Thank you, Mr. Chairman. I'll be brief in terms of rural health transformation program. So yes, we had opened up applications across a variety of initiatives in early July, which closed on August 2nd. In terms of our physician graduate medical education portion of rural health transformation, the Department of Health did receive applications from both the University of Wyoming and the University of Utah, and we brought those applications and recommendations to the somewhat newly created Rural Health Transformation Advisory Committee that the legislature established, which had its inaugural and marathon meeting on Tuesday of this week in Casper. In physician graduate medical education across a variety of applications, the committee funded $17.7 million of year 1 rural health transformation funds, split between 3 different initiatives. One at the University of Wyoming, one at the University of Utah, and another one for a physician GME council to be established that was proposed by Cheyenne Regional Medical Center. In terms of the University of Utah, I won't belabor the description in Wyoming, essentially securing or buying seats, medical school seats. That was a big part of that application. The Department of Health made a recommendation that the advisory committee accepted to double that amount of money to be able to fund a second year or a second cohort of students. So between the University of Wyoming and the University of Utah proposals, the advisory committee funded just over $15.5 million in RHTP awards for year 1.
Thank you, Director Johansson, and thanks again. Dr. Hawes is great on getting that stuff put together at the University of Utah. So, Mike, if I could ask a question then of you, if we're kind of past, is you talked a little bit about the psych work, but could you update us on how the counseling, the school that of counseling is going. There seems to have been, we talked earlier in the spring, I believe, in just trying to understand if you know how that discipline is that up and running and functioning now, or can you give us an update on the counseling degree for?
Mr. Chairman, I'd prefer to get back to you in writing on that. And I mean, I'll tell you what I know and what I think you're asking, right? So overall, I would say the school is in a period of transition. The immediate past leader of that group took a position out of state and has moved on. But beyond that, I think the program has been successful. There have been discussions about, for a short trial period, there was an additional cohort. Instead of one cohort every 3 years, there was one cohort every 1.5 years. And this program is based at UW Casper, if it's the program I'm thinking of that you're asking of. And for accreditation issues, lack of tenure track faculty to teach, that second cohort was pulled back. So it's back to one every 3 years. And there have been discussions through the possibility of rural health transformation dollars or other mechanisms. How could we get that back? I don't have any information on the status of those discussions on that additional cohort, but it remains a strong and a popular program. And but I'm happy to dig more into it, and I just don't want to say the wrong thing or get it completely wrong. But
And thank you, and I would appreciate that, because we could certainly help make some recommendations if we needed to. And I think that we had that rat hole in the School of Education, and was I think there are some, because that's where our school counseling was, and we put this site counseling in the School of Education when there was some thought that it rightfully belonged in healthcare sciences or the School of Healthcare Sciences. And I thought that there was some effort to make that appropriate change. And so if you could just get us updated on that effort, and then because we agree with you, there's such a need in our schools, particularly on additional counselors, not the guidance counselors, but social counselors and licensed clinical counseling, that's an important component in this task force effort. So if you could maybe have us get back with me, and maybe we can talk about how we can help, and maybe a conversation about that in our October meeting, please.
happy to, Mr. Chairman.
Okay, thank you.
I'm good from my end. We have the WWAMI director. You have Fred and Demi here from Witchy. If there are any further questions, I know they'd all be happy to answer them. But other than that, I've kind of given you the rundown on what I wanted to cover.
From legislative perspective, we appreciate the time you spend here at the Capitol helping us navigate the issues between the legislature and the University of Wyoming. You're a great asset to the university and to the state. Thank you.
Thank you, sir. Appreciate
It's not
it.
always easy.
Thanks for your time.
Yes, please.
So, Mr. Chairman, going back to the conversation about stabilizing their funding, building in an inflator or whatever we need to make sure the dues are paid. How can we work on that as a committee? Because I think it's super important.
So I would suggest to the committee, Representative Pendergraft served on the appropriations, as well as Chairman Nethercott, who chaired on the Senate side. The dues always come up. So the Witchy dues, everybody's dues always come up every 2 years. So embedding that to be an automatic thing is difficult to do, probably isn't the historically been the right way. But I think building in an inflation factor, they can do that as they construct their budget. Say you're seeing an increase here to address inflation. And then on like the Witchy where you take, so the University of Utah, those funding, Director Johansson noted, he said for 2 years, then he come back and says 2 cohorts. So each one of those cohorts is covered for the 4 years for a medical school. And so to come back and put that, am I saying that right, Director Jones? Okay. I didn't know if I was reading your look correctly. So if we wanted to try and move Witchy that direction, we could help in drafting an amendment starting in the supplemental budget coming up. And we've got great staff here with Mrs. Martineau to help kind of put that into place and then make that recommendation probably back to JAC to consider that.
So, Mr. Chairman, is that something you'd consider as a motion at this point, or are we at that point yet?
So let's do this. Let's ask our staff to work with us to get that motion ready for the October meeting that we can move it forward. Okay, get the language in place. Okay, all right, thank you.
Thank you.
Who else do we? Looking through my paper. What do we have in the Madam Chairman? We honor.
Yeah.
Rural Health Transformation Funds, Director Johansson or Franz, would you?
Mr. Chairman, members of the task force, I can be brief or as detailed as you would like. Answering your questions, I'll give an overview of what the Rural Health Transformation Advisory Committee on Tuesday has funded for this first year award, just going through initiative by initiative. For our Critical Access Hospital Basic Incentive Initiative that was within the application, the advisory committee funded $48.2 million. For our EMS, Emergency Medical Services Regionalization Initiative, the advisory committee funded $23.2 million, with 2 caveats here that at the end of the entire day on Tuesday, there was a bit of funding left over, and the committee voted to split the remaining funding between EMS regionalization, EMS sustainability, and labor and delivery generally targeted with critical access hospitals. So there's some additional funding within those recommendations that they directed the department to work through. Mr. Chairman, moving to the workforce initiatives, I mentioned the physician graduate medical education component a few minutes ago, that the committee recommended $17.7 million across 3 different sub-initiatives. In addition, the committee approved $35.4 million for the department to contract with a fiscal agent for individual education awards. These are essentially individual support for education directed in basically 3 different areas. Nursing, so CNAs, LPNs, RNs, APRNs, anything in the nursing industry. We will, over the next year, receive applications from individuals who can receive funding support for their education.
Question.
Please.
So would that help us, particularly maybe in our rural areas, rural hospitals, or where we have state facilities and we have those individuals maybe that are acting, that are employed as CNAs, then be able to get opportunities to add value to their resume?
Mr. Chairman, that is the fundamental idea. It's really to provide and grow the pipeline of workforce that we build here in the state of Wyoming. We know that many facilities, healthcare providers my facilities included, especially over the past 6-7 years, have had to rely heavily in some cases on contract traveling staff. This is an opportunity to start eating away at that negative outcome. In addition to the nursing industry, those dollars can be directed at emergency medical services, or EMTs, as well as behavioral health. And I already mentioned the graduate medical education on the physician side is definitely part of the workforce initiative. Mr. Chairman, we had a technology adoption challenge where we allowed applications from 2 or more providers or entities to come together to propose new or enhanced technology projects, and the committee funded $12.6 million in that initiative. And also 3 state-directed technology procurements that were part of our overall federally approved application. A statewide telespecialist platform, the committee recommended funding at $3.4 million. A statewide non-emergency medical transportation coordination platform, the committee recommended funding at $828,000. And a centralized billing system that the state has, and all of these we've done RFPs on and have viable bidders. A centralized billing platform, largely starting with our emergency medical services, but potentially the opportunity to scale to help coordinate centralized billing for entities that might not be as advanced in that world at $2 million.
So coming back, would you repeat the one that says the non-emergency, was it medical transportation?
Mr. Chairman, yes, non-emergency medical transportation.
So would that include transportation for children, court-ordered placement type children, or emergency behavioral transports? There are things of that nature that we've had trouble with?
Mr. Chairman, in some cases, yes, but focus on non-emergency transportation. So this platform that we've done an RFP for would be less, and in fact, not paying for rides or paying for transit. We're generally not allowed to do that. But looking to develop a platform that helps coordinate the logistics of that non-emergency medical transportation. Think of the feedback that we get quite often from our senior community. We have senior centers that do a good job organizing transportation, but it's not always logistically possible. So this is something that will be with the viable bidders we have in development over the next year. Mr. Chairman, we had a relatively large integrated primary care initiative, largely directed at our federally qualified health center and tribal 638 facility network. The department had made or had an original budget in that initiative of $15.6 million. The advisory committee recommended doubling that to $30.4 million. And we had viable awards from a request for application that the committee recommended funding in excess of the budget. In addition, we have an initiative called Clinically Integrated Care Coordination, essentially an opportunity for an entity in every county to propose on that project or to apply on that project to attempt to better coordinate the care of what we call our duals, Medicaid and Medicare eligible individuals that in this case have more complex health conditions. Okay, thanks, Franz. We also have, we were approved by the committee to secure a fiscal agent for exercise and healthy diet programming. This is under the Make America Healthy Again moniker, what we dubbed Make Wyoming Healthy Again and that was funded at $4.1 million. Also has some state policy action items that included support of the Department of Family Services SNAP waiver and sensible nutrition programs, as well as some various policy items that the federal government incentivized throughout the application. Committee recommended $819,000 in funding in those areas. And finally, Mr. Chairman, coming in at just 0.9% of the total award is state administration, the various contracts and staffing that we have to run the program at $1.8 million. With that, Mr. Chairman, I know that's 30,000 miles an hour. Happy to discuss the process going forward. But next, we will be moving after this advisory committee vote to begin the process of getting to contracts and agreements with all the different applicants between now and October 1st, with an obligation deadline from the federal government for the year one funds of October 30th and a spending deadline of September 30th of the following year in 2027.
That's an aggressive schedule.
Mr. Chairman, this has been an aggressive sprint in this first year, but appreciate the good work of folks in my department, but also all of our applicants. And I just have to say the advisory committee that has legislative representation, 9 governor-appointed voting members, and some state agency support did some really excellent work on Tuesday, a marathon meeting, but the discussion was thoughtful. I think the decisions were prudent, and we're excited to move forward.
Mr. Chairman,
Please.
briefly, because I don't want to get off the point of the committee's work, our committee's work, but and I've seen in the headlines, but haven't gone down a deep dive to study how we're using these funds for emergency medical services. And the reason why this trips me a little bit is because in 23, there was a bill to provide EMS districts, and only half the legislature supported it. And most of those legislators were not who didn't support it, were from rural areas. So I think the people have spoken through their elected representatives, but yet we're still going to use these federal dollars and provide these EMS services, despite the fact that they voted no to have these services in their communities. Just want to flesh that out if I can, please.
Mr. Chairman, Co-Chair Nethercott, the EMS initiative in the Rural Health Transformation Program for Wyoming really tried to incentivize regionalization and partnership to get on more sustainable funding paths for the EMS services. We could go down a rabbit hole talking about the economics of EMS. We're happy to do that, but we've studied it ad nauseum, and we know that communities need to and want to pay for that readiness, but cannot always recoup the cost of that ambulance or that ambulance service through billing because of our low population. Accordingly, this incentive program really looks to get those agencies on a more sustainable path by either partnering with a critical access hospital, which generates a higher reimbursement model through Medicare, or through a district like a fire district that has tax revenue behind it. We are exploring, based on the application volume that we saw in this first year, which we didn't know what we would get in the beginning, tweaking that for year 2 to offer even additional incentives that could include various types of districts that, if the community had that, could benefit from these funds on a one-time basis. I'll leave it there. Thank you.
So, Mr. Chairman, Madam Chairman, you bring up an interesting point. I'm aware of a couple of attempts in communities to actually enact the EMS districts. One of those districts actually went through the whole process of getting approval from the county commissioners to create the district, did all of the legwork, came back to the county commissioners, and ultimately the county commissioners voted down allowing it to go to the ballot. And without this being an essential service, and we've looked at all kinds of funding mechanisms, this is probably the best bet that we have to use these federal funds to stand these up. And there is some good regionalization going on, and I think we'll see improvement. But I'm really excited about the fact that we were able to award that funding to help those services.
Where I struggled with that, though, Mr. Boley, is this idea that it's an essential service we just don't want to pay for.
Right.
And so I think it's the spoiled child getting cookie to a lot of degrees. And I like what I'm hearing, that maybe in year 2 there is funding, but you've got to step up to the plate as well, counties or whatever, and help fund, figure out this mechanism to help fund, because these aren't sustainable at this level. They go away. And so if we can get it into place and get the counties to step up, get the citizens. I think the counties, I think the only thing that's bothering the commissioners is they say we're going to allow another mill or whatever it is to come before the voters, that then the voters are going to mutiny and retaliate. But if it's a service they're going to use, it ought to be a service that they pay for.
Right.
And so I think the more we can incentivize getting them to that direction, then it will be sustainable.
Mr. Co-Chairman?
Would you agree?
I absolutely agree. And so the message and the takeaway from your legislative colleagues to those members of the Committee of the Rural Health Transportation Program, this won't continue. Continuing to enable the people of Wyoming to not understand the source of the funding for the services that they receive is not sustainable. It is actually resulting in the wrecking of our state. I fully support EMS districts. I fully support providing EMS to rural communities, knowing that they cannot sustain them on a free market, that that's an absurd notion in a small community, that there can be enough ambulatory services to sustain itself as a viable economic model. But it is a critical service that those community members need when a family member or themselves needs urgent care. That's why we created an EMS district, so they could determine their own fates. They said no. They said no. And so now we're coming forward and saying, but we know you really need this, and we're the government, and we know best. And here's all these free dollars. We're going to create these programs for you, of which you're not willing to pay for and or sustain. And then they're going to come look to the state with all of our savings and largesse, which is being pulled in 1,000 different directions as we eliminate property tax and understand how to pay for K through 12 education. So this is a much more complicated decision than what those members on the committee think. And it requires serious skin in the game before we start handing out free checks for services that we think the people need, but they don't want.
Mr. Chairman, Co-Chairman Nethercott, I agree. I don't mean to candy coat this rural health transformation program. There were many applications denied for the reasons you're mentioning, that the appropriate partnerships and approach for a sustainable funding model were not part of the application. So this is not a program for EMS that cuts checks to pay for EMS, but are incentive payments if you're pursuing or getting on or have the appropriate model that is at the very least more sustainable. But your point's very well taken. This is something that's been a longstanding issue and a heavy debate around the state.
And tender.
Better go get a sandwich.
Better have a chocolate.
Better go get a sandwich.
Okay, where are we at? Oh, Representative Taft, you're so patient. Thank you.
Thank you, Mr. Chairman.
He's a senator.
Yeah, Senator. You forgive me.
You were a commissioner
You forgive me.
yesterday. I
Yeah.
can be your representative.
Yeah, I
today. It'll
know.
be okay.
I was speaking in tongues.
Very good. So as I listened yesterday, and this thought process started well before yesterday's hearings, but and then I listened to the conversation on this today, and I know the idea is not new. It's been brought up. It's been done in many other areas. But when we use words like prop up, we're artificially making something work, and it's not sustainable. And so there are mechanisms out there that will make this sustainable and have long-term services for EMS and EMS districts. If we couple them with providers, with hospitals, they do wellness checks, they do other things that are serviceable and generate revenue for that district. And my concern is that I don't hear any of that conversation happening in this. We're just going to prop them up. Well, ultimately, we're looking at a failing system. Yesterday, we listened to testimony where we have admin costs that are running wild with inefficiencies. We've identified those inefficiencies, and they're waiting to fix the inefficiencies to see how much money we throw at it. Well, that's generally not how we do business. If you have inefficiencies, you find ways to fix the inefficiencies before you help them grow, because the inefficiencies grow with the money if you don't fix them ahead of time. And so is there a possible bill where we could tie efficiency ratings to the dollars before we hand them out? We need to see your plan on how you're going to fix these inefficiencies, or the dollars don't get spent.
So keep going. No, seriously, I think it's a conversation well worth having. And I think the answer to that is yes, we probably can, but what's the mechanism and how does it work? And so I would suggest, again, like we've done on a lot of these things, start building an idea that we can use as a foundation to then vet and poke holes in and fill in gaps for. So happy to let's continue. I think that's what we're trying to do, is create efficiencies. So.
Thank you, Mr. Chairman. And so I guess from your perspective, what would that look like?
Mr. Chairman, Senator Love, every document associated with this plan is available. Happy to send those to you of what was required for the funds. I would just dispute that it's propping up EMS. There are strings attached to these funds for the types of models, financial and otherwise, that the EMS provider would be on. Otherwise, the Department of Health recommended and the advisory committee said no. In fact, to 8 applicants that applied as sole applicants that did not have a partner, did not have a hospital or a fire district or another funding model that they were on. Just speaking of EMS, so happy to share the documents of what we proposed to the federal government, what they approved, and how this is being rolled out. But your point's well taken, and I think the bill that established, the state bill that established the Rural Health Transformation Program also has requirements for that type of reporting and efficiency, so the department isn't just cutting checks to prop up failed systems. The entire discussion around critical access hospital funding that was coming through this program and EMS funding that was coming through this program on Tuesday with the advisory committee almost entirely centered around sustainability and fully recognizing that these funds run out after 5 years, and the goal of the department is not to come to the legislature in year 6 and say we've got to keep all of these programs going. We were hopeful that the perpetuity fund we originally proposed would be federally allowable. It is not, so we've had to put a re-emphasis on the types of models that we want various providers to get on, and therefore would be incentivizing getting on those models. And quite frankly, if they don't, just give you a few examples. Partnering with a critical access hospital gets you cost plus reimbursement as an EMS provider. If you're the only provider in a 35-mile area, you get 101% cost-based reimbursement. That's more sustainable than some of the models that EMS agencies are on now. If they proposed to do that and then they do not get the funding. So just a simple example there, but happy to work offline to show where some of these opportunities are, but also the pitfalls where I and my team, and I think the advisory committee too, is keenly aware that we are in a situation where once again, a lot of money's coming down from the federal government, and it's a temptation to use it to stand up new programming that would require state support on the back end, and we're really trying to avoid that.
So I might just add a little comment, Madam Chairman, on this. I would just argue that this task force would not exist were it not for Representative Geringer and Senator Taft, who took this prior to last session and started saying, how to resolve this? So I think as you look and say, what can we do? I think you're in the process of getting it done. I think hats off to both of you for really instilling this and getting it done. But I would just also remind you that it even took God more than one day. And so as we work to make and put into place these efficiencies and do things that move the state forward, it is a process and it does take time. And so asking the question is fair, and then taking it home and digesting and figuring out how we make the puzzle and put it together is just part of the process. And we're just glad that we're have an opportunity to do it, and really glad we have the people at the table of this task force that we do. Grateful for it's a good process and it works. Sometimes just doesn't move as fast as we'd like. Please.
Mr. Chairman, just as a follow-up, so I use the word prop up because that's what came through the microphone prior to my last conversation. But the inefficiencies have been identified. And what you're reading off of over there, I have looked, and I didn't have it in any of my documents prepared for today for me to digest or look at anything else. And so it would be awesome if I could have a copy of that, or this whole committee could have a copy of that, so we could digest it and look through it. And then we can look at the requirements you're going to put on those dollars, so we can see if there's a way we can help in that process to make sure we are being efficient and sustainable long-term.
Representative Pendergraft.
Thank you, Mr. Chairman. I would second that. I was sitting here looking online, trying to figure out who was on that commission. And I don't believe that's been updated yet, but yeah, they have the data that you shared, and also who else is on that commission. It shows the two legislators, but nobody else is listed on the site. So.
And Director Johansson, you've only been doing this for 8 or 9, 10 years, and I think you well understand the need to provide information to the committee. But I'm really just giving you out of jail free card because of the time you've had to spend in the last getting all of this put together, evaluated and approved. And I just say thank you. And we get it, and but I think it'd be, maybe we could ask, as you kind of get the edges filed off from it, to prepare a document that we could look at, this task force could look at as we get ready for the October meeting.
Mr. Chairman, it'll be in your inbox in 10 minutes.
Okay. One more. Be kind.
So, and I don't mean to sound ungrateful or trying to be adverse to anything here. I'm trying to figure out how we can affect positive change. And as we listen to this, we're bound by a lot of federal issues that we just can't overcome. Efficiencies inside of our system are one way we can manage this in a small part. We understand that the bigger underlying issues is coming out of the federal government. And so I don't want to ever say that I'm not grateful. I am grateful for all the work you do and everything else. I'm just trying to find real answers for our communities. So.
And Mr. Chairman, for the whole task force, no offense or adversarial feelings felt at all. On the agenda, I understood that the RHTP section was specific to workforce, and I might have misunderstood that. So the 30,000 mile an hour overview of all of the funding we just did was just for a general update, but happy to shoot the committee of the task force all of the documents that we have that were approved as of Tuesday night.
Thank you. All righty. I think we are at that point of public comment for what we've talked about this morning. If there's anyone in the room that would like to make public comment, we invite you to come up. And we would ask Clarissa if there's anybody waiting on, there's no one online, so we will Nobody glaring at me and running to the speaker. We will go ahead and pause for lunch until 1:30.